Buffett letter, which interestingly he said parents should read their will to their children while the parents are still alive. And I've talked to a lot of wealth management firms and private banks that said a lot of wealthy clients saw that Buffett letter and are now calling their advisors saying, should we do this? And it is a very good idea to do it. Maybe not everything in the will all at once, maybe a longer conversation over years in which you dribble out some of it, but
I think he's also said he did this with his adult children. Didn't start when they were young.
absolutely.
It's not something you do when the kids are younger, but when they're older and you have faith in what they're doing. And his point has been, you don't want to leave this for them to be surprised when you're gone and then have resentments or not understand or have anyone be able to explain to them why you're doing these things.
We've all seen movies, and it's true, where the attorney reads the will and one sibling's upset. Why did dad or mom give it to them? And his point is he has done this with his children as they're adults over a long period, and he's made changes to his will as a result of that. So it's helped both ways, but it was a really wise piece of advice that is already making a huge impact, as he always does, on wealthy. And we're looking at $84 trillion that's going to pass from older generations to younger generations. So this is a huge deal among the wealthy. The number one issue right now is not how much money am I going to make over the next 10 years, is how do I transfer that to my kids? How do I raise my kids in a way that's not going to make them spoiled? And Warren Buffett has contributed to that debate a lot by telling, look, tell your kids about the will and then have that discussion while you're alive. Don't save it for later.
And by the way, did not give a whole lot of money, relatively speaking, to his kids with this. His late wife, Susan Buffett, had given each of them $10 million when she passed away. That was the first large sum of money they ever got. And they are giving away $150 billion. They're going to be responsible for that. But
it's a lot.
His point was, give them, when they were younger, he and Susie Buffett thought that they wanted to give their kids enough that they
could do anything, not so much that they could do nothing, which is such a great phrase and a great way of living. But and so he appointed 3 other trustees who were younger than his kids, because this money may well outlive even them.
Well, that's the law of compound interest is the thing that interests me the most. He's given away $60
It's growing too fast. His fortune is growing too fast.
Yeah.
Yeah, nice problem.
I want to have these problems.
Yes, we'll hold it.
All right, when we come back, Mike Allen from Axios will join us with a look at the big political stories to watch this morning. And a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We will be right back.
President-elect Trump held a call with Mexico's President Claudia Sheinbaum days after he threatened to impose sweeping new tariffs on Canada and Mexico as part of his effort to crack down on illegal immigration and drugs. Both leaders described the call as positive. Trump says Sheinbaum agreed to stop immigration through Mexico, effectively closing the southern border. Sheinbaum, however, says she told Trump that Mexico is already taking care of migrant caravans. In an address yesterday, Sheinbaum clarified that she did not agree to shut down the border. And she interrupted a reporter asking about a potential tariff war, saying there will be no tariff war. So he said, she said. Joining us now with the latest on the Trump transition, Mike Allen, Axios co-founder. It's always our favorite game on Squawk Box. Where is Mike today? You were at an airport last week, then you had palm trees. Now I'm trying to figure out, it's like, what state are you in? We see some trees behind. So first of all, where are you, Mike?
Somewhat warm.
Robert, you are so good. So I'm coming to you live from chilly Raleigh, North Carolina, where my brother Scott and his wife Sherry were kind of host me, feed me yesterday on Thanksgiving. So excited to be with.
It's also where most, if not all, of the Christmas trees that we get here in the Northeast come from. So that's an appropriate spot, Mike. So let's talk a little bit about this tariff war, because we all remember in 2019 there was a similar reference, and everyone's referencing this, where there was a lot of migrants coming across the border. Trump said we're going to impose tariffs on Mexico. They reached an agreement where Mexico said, look, we will hold them here instead of letting them cross the border, and so the tariff disappeared at that point. People said, well, that's what's going to happen again. Which Trump are we going to get with regard to tariffs this time around? Are we going to get the Trump that basically there was a lot of sound and fury, and then a negotiation which really didn't result in much change but gave him at least the ability to say there was change? Or are we really going to get tariffs?
So those two Trumps are not mutually exclusive. So with Trump, everything is negotiation. I took his Truth Social post as the beginning of a negotiation. But taking your viewers behind the scenes of the transition, I just came up here from Palm Beach, and the transition is definitely feeling aggressive, vindicated, validated. And so these are not bluffs. These are real. And I think another place that we're going to see that is with tech. At the top of the show, you touched on one of the biggest stories in the transition and one of the biggest stories in business, and that is these tech CEOs, these tech moguls getting savvier about interacting with the government in waiting. So Thanksgiving Eve, Wednesday night, you saw Mark Zuckerberg, Meta CEO, having Thanksgiving Eve dinner with President-elect Trump. And I have a little squawk scoop for you. At that dinner, Mark Zuckerberg showed the president-elect the Meta Ray-Ban smart glasses, and they were a big hit around the table. He met with the senior staff. Earlier, the Commerce Secretary-designate Howard Lutnick stopped by the dinner. So, Robert, I think you're going to see a lot more of that in the weeks ahead. Business, every sector, making the pilgrimage to Palm Beach, interacting with this coming government.
But is the signal to business here that their future, and therefore the future of their shareholders, depends on their personal relationship with Donald Trump?
'Twas ever thus, right? Like you have covered it yourself. Vital with this president, and I'm told that he is just drinking in the communications that are coming in from every sector. And the way that one person said it to me is like, this is a very different Donald Trump than when he won in a surprise in 2016. The way one top transition insider said it to me is, he feels like he has this under control. And the way they said it is, a lot of people in business are acting like he's already the president. So you saw Scott Bessent, the winner of the knife fight for Treasury. That has been one of the best received of all of the president-elect's nomination announcements. Definitely well received on Wall Street. And so that's buying him some goodwill with business, which is worried, skeptical, but knows Washington's open for business, lots of business inputs to this government, and they expect an extremely business-friendly agenda coming out.
Hey, Mike, it's not the only place, business isn't the only place that's almost treating him like the president. We're just reporting on the president of Mexico and the interactions back and forth. You can say the same with Trudeau, the prime minister in Canada. I mean, there are negotiations that are taking place on tariffs and policy to come before he's ever taken the oath of office. It feels a little unusual. Obviously, there's a lame duck president right now. But I think probably because of his experience in the past, because he's coming in, you never see a president who takes 4 years off, or at least in our lifetime, and then comes back and is ready to go. He's coming in with plans that I've never seen in my lifetime, and the ability to kind of move and act on those things.
No, that's a very smart insight, and you have the combination of what you're pointing to there, that he knows how to work government. He feels confident about his choices. The way that it's been said to me by a transition insider is these are people who get him, who understand him. Like last time, there were a lot of people who either didn't understand the vision or didn't buy into the vision. This time it's all Trump. And so you combine that with he knows what he wants to do. He plans to act aggressively. He has Elon Musk sitting there literally next to him, urging him to go big. And you have these personnel in place to make it possible. Add to that the point that we made earlier about how personal relationships are so vital with Trump. And so
I'm sorry, Mike, I just need to interrupt on this question, which is, it seemed like it had been tradition, and for perhaps a reason, not to be running a parallel foreign policy in the United States. Is there a danger?
We had the congressman who's been nominated as NSA last week, and he said he's actually been speaking with Jake Sullivan. They've been coordinating.
They've been coordinating. I mean, I guess that's my question. If they're coordinating, that's fine. But is there a danger of running a foreign policy while there's still, 2 months left in the current administration?
Spoiler, this president-elect does not do anything traditionally, so you make a great point. It's absolutely true. So what your viewers can watch for that continues with this aggressive government waiting, as you all rightly point out, going ahead of what we're used to with a presidential transition. Now we're going to start with the tier 2, tier 3 appointments, and a lot of them steer a lot of government money. I can tell you there's a lot of people in business that I talk to. They're more concerned about who's going to be the deputy, who's going to be in charge of acquisition, than they are at the very top. One big job, another scoop for your Squawk viewers, another big job that we're still waiting for is we expect President-elect Trump to name a new FBI director. And for a top FBI or DOJ job, we're told that he still plans to appoint his ultra-loyalist Kash Patel. I would say the deputy FBI director is probably most likely. Not done, but in the pole position for FBI director, the top job is the Missouri Attorney General Andrew Bailey. And we're told that if Kash Patel doesn't get that 1 or 2 at the FBI, that he's likely to get some other appointed investigative role within DOJ.
The only thing I will also add is that we had Amos Hochstein on from the White House on Wednesday talking about the peace that they've tried to broker between Lebanon and Israel,
right.
and he
Hezbollah.
said this, and Lebanon really too, to engage on some of these things. But he said that they have coordinated with the incoming administration as well. So there is channels of communication. Some channels of communication in terms of how they view these things. And the incoming NSA, Congressman Waltz, said that the message that he wants to send is that they are very much working hand in hand, that there is no way for foreign enemies to try and make hay between 2 different administrations, that they are working hand in glove.
Yeah, Becky, that's a great point. And one more data point on that for you, bolstering your point. This is a story that Axios Barak Ravid wrote, is even while there's been a delay in the formal transition machinery as the Trump team signed their documents with the U.S. government, President-elect Trump has been getting intelligence briefings from the Biden administration. So that's another example, Becky, of what you're pointing to.
All right, Mike Allen live from North Carolina. Mike, thanks so much for joining us this morning. Great to see you.
Thank
All
you for
right,
your
coming
time.
up, we'll talk retail trends with Jan Niffen on this Black Friday. That is straight ahead. And later, former Walmart US CEO Bill Simon joins us to weigh in on the retail rush. Squawk Box rushing right back.
.com.
OPEC is delaying Sunday's virtual meeting on oil production curbs until Thursday. The group said that it's pushing back the meeting because several ministers are attending the meeting of the Gulf Cooperation Council in Kuwait on Sunday. In the past, OPEC has delayed meeting dates when member countries need more time to reach a deal on production levels, but we will see. Right now, it looks like WTI is at 68.37. Year to date, down about 4.5%, but certainly it's come down over the last month and a half or so, and even more so last week. When we come back, retail expert Jan Niffen will join us with his expectations for the holiday shopping season. Get to it. It's Black Friday. Are you out there yet? Squawk Box will be right back. is 7 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Steve Leisman and Robert Frank. Among today's top stories, it is the final trading day of November, and investors have a lot to be thankful for this month. Check it out. The Dow is up by 7%. It's on track for its best performance in a year. The S&P 500 and the NASDAQ both gaining 5%, with the S&P on pace for its best month since February. And the small caps actually are leading the pack. You've got the Russell 2000 up more than 10%. That could be its best month since last December.
So we got the broadening that everybody was talking about.
There it was. The other 497 stock or 493 stocks in the S&P 500 is what we keep hearing, but especially at small caps. A source confirming to CNBC that the Federal Trade Commission has opened a broad antitrust probe into Microsoft, likely the last major action before President-elect Trump takes office in January. The agency is reportedly looking into allegations that Microsoft is abusing its market dominance in productivity software. That includes imposing strict licensing terms to prevent customers from moving their data from its Azure cloud service to the competition. And consumers were shopping from their sofas on Thanksgiving. Salesforce says that online sales were up about 4% through yesterday afternoon. That compares to a 2% rise last year. A fresh sign shoppers are snapping up steep discounts from retailers. Let's take a look at the futures this morning. They've been building through the morning. Right now, Dow futures up by about 160 points. S&P futures are up by 16. The NASDAQ up by 70.
All right, let's go to the best dressed man at CNBC today, Dom Chu. Looking at this morning's movers, pre-market movers. Dom, let's see that sweater again. There it is.
No, you're the best dressed guy out there. You and Steve got the
Duffy
actual
didn't
jackets
call you,
and
Dom?
ties on. And
Duffy
Becky always
didn't
looks
call you
good.
till you put a tie on?
Dom, they
So I got-
saw your outfit and they had sweater envy this morning.
Right, we all wanted to not be wearing a tie today.
I got sign off from Mary in our wardrobe department. The insiders here got
special
to know who I'm talking
dispensation.
about.
We're talking about Mary Duffy, ladies and gentlemen, who
Yes.
runs the network very quietly.
Yes, it's kind of like the puppeteer with the strings, kind of, behind the scenes and everything. But yes, I got the sign off to wear a jacket with a sweater and a sports shirt.
It looks
so I'm gonna
great,
go with it.
Dom.
What
You
you
wear
guys
it well.
can't see is, by the way, Robert, I got nice dark jeans on, which you can't really tell are not jeans because they're they look like slacks. Anyway, thank you very much for the introduction on this Black Friday. We're going to start with shares of Applied Therapeutics. So I'll show you, it's a big move here. They're losing just about 73% of their value. This is the day after the FDA, late on Wednesday, declined to approve its drug to treat a rare genetic metabolic disease. That drug was set to be the company's first actual commercial product. Those shares have now shed all of pretty much their gains through the course of this kind of year period. So watch Applied Therapeutics, APLT down 73%. Meanwhile, you got Uber shares, which are moving in the kind of opposite direction, up fractionally, just about 2/3%. This is all despite the FTC, again, consumer protection probe into the company is kind of in effect from that regulatory agency. They're looking at the Uber One subscription service under this particular company. The FTC is looking into the enrollment and cancellation process of that subscription service. A probe, remember, does not guarantee a lawsuit will actually be brought. The ride-share giant says it is cooperating with that inquiry from the Federal Trade Commission, so watch those shares. And we'll round things out with Bitcoin on the climb again, but still below that key $100,000 level. The volatile asset peaked, remember, around 99,800 or thereabouts before going back down below 91,000 earlier this week. It's still up massively, about 40%. Since President-elect Trump won that election. So we're keeping an eye on Bitcoin. And by the way, just for reference, Robert, because I know you like those large numbers on the wealth side of things, at current levels, according to CoinMarketCap, you're talking about Bitcoin's total market value being about roughly $1.92 trillion with a T. So keep an eye on that 100,000 mark, Robert. I'll send things back over to you guys.
All right, Dom, one last question on the sweater. Becky and I had this debate, quite an extensive debate. Is that a sweater vest or is it the full sleeve sweater?
Full sleeve sweater.
All
Oh
right,
my
so
gosh,
you
how
went
are you
full
not hot?
sleeve.
I was watching that thinking it's got to be a vest because 3 layers is way too hot to be under the lights for all that time.
It is, but generally, because Becky, you, Robert, and Steve know this. Here in Englewood Cliffs,
It's
it is
very
generally
cold.
very cold. Yes, and many of the females that we have in our newsroom complain about it constantly.
Yes, a lot of blankets.
What,
Yes.
what,
There's
what
fleece
people may
blankets
not
and-
know, Don, what people may not know is Dom Chu doesn't sweat.
That's true.
That's
Well,
the
not when
key.
it's this cold. It's like a meat locker
Dom
in here
Chu, in the
sometimes.
face of seconds to deadline, he does not sweat.
Never
He's
let
a
them
pro.
see you sweat, let alone bleed, guys, right?
Thank you, Dom.
You got it.
international man of mystery. All right, from Walmart to Ralph Lauren, our next guest is weighing in on this holiday shopping season's winners and what's ahead for 2025. Joining us right now is Jan Niffen. He's the CEO of J. Rogers Niffen Worldwide. And Jan, it's great to have you here on this very important day for the retailers. How was your Thanksgiving?
Hey, it was great, and I'm not wearing jeans, so Dom and I are not going to be in the same boat here.
You are wearing pants.
Yes, I'm wearing the full gear, and
Okay.
I will be out in the stores right after I get off of this hit. But
All right,
I was
let's
out today, Wednesday, and
go ahead. The shoppers are out?
clearly they are. They've been out all week. We had a strong week leading up right through Wednesday, and it's been the best period since November started. And I think that's going to continue today, and I think it'll run right through the weekend and Cyber Monday. This is going to be a strong finish here. Remember, we're already 6 days closer to Christmas than we were last year on Black Friday. So everybody's going to be out, and they were already.
Jan, you and I have had kind of a running conversation off air since the election. We just showed how many of the major averages, the stock market averages, have had their best month in a year, some even longer. We've been talking about crypto up 40% for Bitcoin since the election of President Trump. And I've been trying to figure out if that enthusiasm that you see from investors has also played out in terms of consumer confidence, and that means stronger sales. What's your take on this?
Well, every 4 years during the presidential election period, we get a little lull before the presidential election in retail sales, and after we get the post-election bounce. And I didn't know if that would happen this year because the lull wasn't very deep. But yes, we got the post-election bounce, and it has continued, and now it's strengthening as we head into the holiday. So I do think that's half of the people are glad, and the other half are relieved the election's over, and it happens every 4 years, and it happened again this year. And I think it's going to continue right through holiday now because we don't have any inflation in goods, and goods are what people buy for holiday. We're still seeing inflation in services, and the consumer looks at it, and they're smart enough to go, the sweater that Dom's wearing is a better deal this year than experiences. And they're buying stuff. And that's a technical retail term, of course, stuff. And we're seeing that continue. And I believe we're going to see a gradual shift here toward discretionary retail goods. And that's going to propel right through into 2025. So I'm feeling pretty good about discretionary retail right now and in the beginning of next year.
Jan, I thought you were emailing only with me. It turns out you were also emailing with Becky as well at the same time. But be that as it may, I have been publicly right over the last several years because of help from you in thinking broadly about the consumer, because not only do you look at a single product on the shelves and the price, you also have this fantastic macro view of the consumer. And where you have guided me over the last several years is in not believing that the consumer was about to give it up, which is what everybody was saying in the post-pandemic period. So give us your view now, Jan, publicly here, not in a private email, about where the consumer is, where their balance, how their balance sheets are, their savings. You looked right through this notion that the consumer was out of savings in the post-pandemic period, and we kept believing that there was not going to be a recession. I want to thank you for that publicly, but also get your take on where things are going.
Steve, I have the benefit of not being an economist. I'm just an old retailer. And I have been watching the retail consumer for 50 years.
Right.
And the retail consumer is not that hard to figure out. If the consumer has a job, they think they'll keep their job, and they believe if they lost their job, they could get one paying just as much or more. They keep spending unless something stops them. Debt can stop them, but the consumer's ability to pay back is fine. We haven't seen any change really there. They're as good as they were pre-pandemic. They are loaded up some on debt, but not enough to stop them. And that won't keep them from buying unless they're fearful that they can't pay it back. And that's when they get job concerns. We're not seeing any of that, and we haven't seen that for the consumer, even right through, well, right at the beginning, of course, of the pandemic we did, but not after that. So the consumer's in really good shape. Unemployment's still low, not a little higher than it was, but it's still low. continuing claims aren't that high. They did cross through 1.9 million, but they've been hanging in the 1.8, 1.9 million range, so the consumer's not that fearful. So they don't look quite as strong on the data as they did on things like unemployment and continuing claims, but they look fine. And pretty much everybody that wants to work is working when you're looking at a 4% unemployment rate. So I feel really good about my consumer. I do feel pretty bad about the lower end consumer. They're still really struggling with the impact that inflation caused over the last 3 years. But if you're looking at the $100,000 annual household income or the $200,000, and that's a huge chunk of what we get for Christmas spending, they're doing very, very well. The $200,000 a year consumers told us they're going to spend 20% more than last year for holiday. That
Wow.
helps a lot when you're getting your numbers.
Jan, I want to thank you. We really appreciate talking to you, both on air and off. So thank you for joining us on air today, and happy hunting out there today.
Hey, it's a pleasure, and I'm sure it's going to be fun out there today. I happen to be in Pittsburgh. I'll be at Ross Park Mall.
We'll see you there.
Happy holidays, Jen. Coming up, a contrarian call on inflation, really dovetailing with this conversation we just had, and what that could mean for investors. Plus, millions of Americans are going to venture out to buy a live Christmas tree this weekend. Though growers are facing historic challenges to get them to the lots, we'll tell you why. You'll be paying more this holiday season for that Christmas tree. Squawk Box coming right back.
All right, welcome back to Squawk Box. Taking a look, we have a festive fair value futures market right now. A little red and green, mostly green. S&P up 15, Dow Jones up over 140, and the Nasdaq up 64. Markets fell ahead of Thanksgiving holiday after the latest PCE inflation data showed inflation inched higher in October, but the broader averages are still each more than 5% higher for the month. Our next guest has a contrarian call on inflation, saying headline CPI bottomed out in September at 2.4% and says investors that prepare for higher inflation and higher interest rates will be rewarded. Michael Landsberg is Chief Investment Officer at Landsberg Bennett Private Wealth Management. Good morning, good to see you. So tell us about this contrarian inflation call, because I think, we're seeing some changes in the bond market. Steve was talking this morning, we're seeing a sort of flattened curve right now. What do you make of what's happening, particularly with the 10-year right now, right at 4.2, so that's come down quite a bit over the past few weeks. And then, therefore, how does that fit into your view of what's going to happen with rates and inflation?
Robert, I think part of the reason it's come down recently has been, I think, the bond market likes what they saw with this recent appointment. And Scott Bessent's, a market participant. People like having somebody that's got credibility in the market. What's been interesting is the Fed's cut, interest rates 75 basis points, yet yields have jumped 65 to 75 basis points on, different maturities. So I think the bond market ultimately is like, I'm not sure we're really, believing what we're hearing from the Fed. A year ago, I remember, being on the show when people talked about 7 interest rate cuts. I was saying at the time we might see 3. I think people are overestimating what we're going to see in 2025, and I think it's because of inflation. I think inflation is coming back. You're seeing that with, coffee, cocoa, a lot of things that we eat, beef, lean hogs. Things are starting to kind of tick back up. I don't think we're getting back to 9%, but I think at the same point, I think the fact that the Fed and a lot of people think we're going lower, I think is wrong.
Well, that's interesting, because you said you feel that inflation bottomed out at 2.4% in September. You think it's going to go, to 3 to 3.2% next year? Is that going to be a first quarter? You're talking the end of next year? And you mentioned copper, coffee. These aren't huge contributors to the economy. What are the components that you think are going to be really driving us back over 3%?
I only really look at the next 6 months, so I expect to be 3.2 in the next 6 months. What was interesting, when they talked about transitory a few years back, my models were looking at saying we're going to have 6 months in a row of increasing inflation, and I'm very similar in this circumstance. I don't see it going quite as high, but when they talked about when inflation and the war has been won, we looked at our data and said, okay, shelter prices are too high.
Yeah.
A lot of foodstuffs are now starting to head higher. And again, I don't think it's going to be back to the 9% numbers, but we've got it going basically by the end of the first quarter of 2025, is I've got 6 months in a row of headline inflation moving higher. We use headlines simply because it models better for us than PCE. And again, I think PCE may have that tweak as well. But we're looking at that saying, okay, that's going to be an area where we've got to look at it and say, okay, if inflation's heading higher, if the rest of the street has it going lower, what does that look like from an investment standpoint, where we want to put our dollars in an environment where inflation is moving higher?
Yeah, so to that point, if you look at rates higher for longer, that would normally not be great for stocks, but you seem to be, and correct me if I'm wrong, fairly bullish on stocks, at least for the next 6 months. So what's your expectation for the stock market, and then where do you see the best sectors within the stock market, at least for the next 6 months?
Yeah, we're bullish simply because earnings have been great. I mean, S&P earnings, I think, are up 8% year over year. Nasdaq's up over 20. I'm not really a big fan of small cap. Small cap, I think, is still -4 year over year. Small cap, made an all-time high a week ago, but the interesting thing was it's barely up in the last 3 years. So you've made no money in 3 years. So we still avoid small cap, but we look for those sectors like utilities, like energy, that we think will do well in this environment. I like insurance stocks from a pricing standpoint, where you can build inflation and margins into your pricing. And I think those are the areas that are going to do well. I think healthcare is not going to be an area that's going to do well, given kind of where we are in terms of margins, but also you're having a different, kind of atmosphere, if you will, in Washington as to who might be in charge of what's going on with healthcare.
Michael, just very quickly, do you think the Fed should not continue to cut here? And if that's the case, is that your case against small business, or small and medium-sized businesses, that they're not going to get relief on the interest rate front?
Absolutely, Steve. I think you're going to get one in December. I don't think that we should, but I think you get one. But yeah, I look at it from the standpoint of if rates go higher, the biggest companies in the world are not going to have that problem. A lot of tech companies don't have a lot of debt, so they're not going to be that problem. They're not going to have a problem getting credit. But small companies certainly are tough there. And again, that's on the balance. When I say the small companies, there's a lot of great small companies in this country, but it's a stock picker's market in small cap. You can't buy the Russell 2000, have made no money for 3 years, and think that's a good place to be. So I think you want to stay with, with the large cap sector-wise. We do favor, like I said, utilities, energy, and industrials.
This is a dissonance with the Russell 2000 that I don't know if the market is internalizing, that if we're not going to get the interest rate relief, are they going to get the earnings growth they were expecting? I don't know the answer to that, whether or not the valuations are there.
All right, Michael, thanks so much for joining us.
My pleasure.
Up next, we will head to the mall, just like everybody else, to get a feel for what retailers are expecting for this Black Friday.
Look at that already. Wow.
And then, thinking about heading out to find the perfect Christmas tree, well, you may be paying more. We're going to talk about why Christmas tree inflation could be sticky this year. Squawk Box will be right back.
Time now for today's Aflac trivia question. The Detroit Lions played the first Thanksgiving Day game in 1934 against which team? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. The Detroit Lions played the first Thanksgiving Day game in 1934 against which team? The answer? The Chicago Bears. The defending back-to-back world champion Bears beat the Lions 19-16.
All right, let's head to the mall, find out what's expected to be the biggest retail day of the year for in-store shoppers. Courtney Reagan joins us from Paramus, New Jersey this morning. And Courtney, we were talking about what a big day this is, but this has changed. It used to be that at 6 a.m. we would watch the crowds rush in as these stores open. That's not really the case anymore.
That's true, Becky. That is very true. You're not seeing sort of these stampedes. I mean, this mall did just open. We've seen some short lines forming. Actually, the longest line that I noticed at this mall anyway was at Lululemon. And Black Friday does look different than those days of pre-dawn lines and the store stampedes. But the National Retail Federation still predicts that 132 million Americans, or 72%, will shop today in-store and or online. So one of those channels, maybe both. For stores, though, it's still expected to be the biggest day of the year, according to Sensormatic, and the biggest day of the week here, followed by what's considered Super Saturday for the season, or the last Saturday before Christmas, also the second biggest of the year. Now, Retail Next predicts that stores will see a slight traffic growth this year on Black Friday versus last year, even though overall foot traffic is down about 3% so far this year for retail. The conversion rate, interestingly low, might end up being lower on or around Black Friday compared to the weeks leading right up to Christmas, because you have higher browsing right now, but when time runs out, you also see purchasing go up. So Adobe Analytics predicts 71% of shoppers plan to shop online today, spending almost 10% more than last year to $11 billion. The expected biggest growth rate of these Cyber 5 days will be today. Now, sales data from hundreds of thousands of Shopify merchants shows 9 p.m. was the peak online sales hour for Thanksgiving Day. The average cart value checking out $164. T-shirts, skincare, vitamins, so far the top categories for those Shopify merchants. And as of 2 p.m. on Thanksgiving Day, total U.S. online sales were up 4%, according to Salesforce. Again, that didn't capture peak time though. And it's hard to know exactly how a day like today will shake out for retailers, but at least when it comes to Black Friday's stock performance on this holiday shortened and traditionally light volume day, we should say, thanks to a stock screen by our CNBC data team, Chewy has the best Black Friday share performance since 2019, up an average of 1.65% on Black Fridays, while Caleres, that owns footwear brands like Sam Edelman, Allen Edmonds, and some others, is the worst performer, down slightly more than 2% on Black Friday since 2019. The XRT retail ETF has fallen an average of 0.3% compared to the S&P 500, down an average of 0.4% on Black Friday since 2019. If you're shopping for stocks today, of course. Becky, back over to you.
Hey, Court, what kind of discounts have you seen there? Dana Telsey was here earlier. She was saying she thinks 30% off is kind of par for the course these days.
I think that sounds about right. And some early data that I'm seeing online put the average online sales price discount at about 27% in the United States. So obviously it's average. You're going to see higher or lower based on that. But, you know, I think it's always a very traditionally promotional day. And I think you might get some pretty good deals on apparel, most especially because of that warm weather we've been seeing. A lot of retailers need to move some of that stuff a little faster. Today's a good day to do it.
Thank you, Court. Grab a coffee. I'm sure
Thank
we're going
you.
to see a lot of you today.
I will.
All right, coming up, VaynerX Chairman Gary Vaynerchuk. Did I say that right?
Yeah, Vaynerchuk. Yep, you got it.
I don't follow this thing. So I just talk social media shopping trends and much more. But up next, we head to the farm in search of the perfect Christmas tree. Squawk Box will be right back from the woods.
Welcome back, everybody. Social media shopping is booming this Black Friday with millions on social media buying new products and brands. And now live shopping events are drawing real-time sales and exclusive deals. Joining us right now is Gary Vaynerchuk, VaynerX chairman. And Gary, welcome. It's great to see you this morning.
Great to see all of you.
So what's a live event? Is this different than QVC shopping?
Not really.
Yeah.
I mean, it's really, when this is the year, next year, this is going to be a huge topic for everybody who watches this program, and you'll be talking about this. It really is QVC on social. Other than the way the algorithms work in social now, when a person or a company goes live, they're going to find audiences. The algo's going to bring it to you. So obviously, QVC home shopping that were in the 80s, the consumer had to click and go there. The fact that I'm going to be in my feed and then boom, there's a live shopping event, and boom, the algo knows that I like t-shirts or vitamins or beauty, and I get it, that's going to be a big factor.
Can I just say, you're going to have to sell me on the live events, because I already buy a lot of stuff on Instagram.
Yes.
Where it's a pretty effective ad. It's
Yes.
flashy, it shows me how it works.
Yes.
The video makes me think, yeah, I want this. I don't know if I want somebody talking at me saying, hey, buy this product, you've got this much time to do that. Sell me on this. Why do I need something more than what's already selling me on Instagram?
Well, I don't really want to sell you, it's been sold, meaning there are unbelievable amounts of people making over $1 million a month already on TikTok live shopping. So it's not about, convincing, it's about the conviction.
Those are vendors. Those are essentially companies selling.
No, they're influencers.
You're saying influencers are making $1 million a month?
Yes and yes, right? So
They have a product.
yes, as well to that.
And hawking a product.
Yes, to that as well. This is going to be massive. Again, this is such a global platform. This has been going on for a decade in China. I've
watched the stuff in China.
Right? I've literally been waiting for 10 years for this. Like, there's videos of me in 2015 saying, this is coming.
It seems a little hokier than some of the flashy ads I already get that are
But
really
I think
pretty
you'll
well done.
appreciate this. Some print, let's talk about it historically. What you're talking about is a print ad, in essence.
Right.
It just happens to be in
because
social.
the video
Because
is
video, fine.
This is a live person.
Great.
Because it usually shows me something about the product I want.
That's video, so that's a commercial.
Yeah.
If it's an image, that's print. And all this is QVC. It works. I can speak for myself. I have a Pokemon-like brand called VFriends. We're doing live social shopping. I'm doing 7 hours, ironically, today about it.
You're going to be on for 7 hours?
I'm going to be on from 12 to 7 today on Whatnot, which is one of the platforms that's emerging. And 3 Mondays ago, we sold $40,000 worth of t-shirts in 2 hours.
Wow.
That if I, and we're good at this, did my best social media non-live shopping advertising, we would have sold $3,000 worth.
Okay, I'm convinced by numbers like that.
Yeah.
We just did a shot from the mall in Paramus.
I saw.
Not a whole lot of people there. Is this why?
Well, it's 7:30 in the morning. Honestly, I was back there. I was like, that's a lot of people.
No, but we used to do it. Like, I've been doing this for a long time. It used to be the openings at 6 a.m. at 10 a.m. at 8 a.m.
Target.
It was insane. Break down the doors.
Is there an investor play on this? Is there a way? I know this is changing retail, but is this taken away from Target? Does it take it away from Walmart?
I'm glad you brought this up. The reason I'm so excited to be here is every retail, every CPG. This is going to be over the next decade a consumer packaged good. So if you're Procter, if you're PepsiCo, this is going to be a major deal, because don't forget, we have major channel conflict wars between the packaged good companies and the retailers. And the Amazons and the Walmarts are taking media dollars now away from social. The overall impact to consumable products and to retail of this dynamic and social shopping, and now the social networks taking an 8% rake on every transaction.
I heard 6 in some cases.
8%?
Some, but 8% and then a 3% process fee. But again, this is also going to hit Main Street. If you're a normal store in a small town in Jersey or California on Wednesday at 3 p.m., there is nothing going on. To your point, the retail traffic is changing. The fact that you can turn your little boutique into a studio now and go live shopping.
Entrepreneurs can do this too. If you're a small business owner, you can get right out there.
10 years ago, I used to go on this program and others and talk about influencers going to make money, and I got a little, and now it's a multi-billion-dollar economy. Shopping
retailers? Does it undermine that?
Yeah, I would argue that live social shopping is the only potential thing that Amazon should be worrying about in their domination. That's how big this could be.
That's really amazing. And I guess who this is disrupting is traditional media, who might have been pitching you these ads before.
Yes, but it's also going to disrupt retail. Like this is another, don't forget, attention ultimately is the ultimate asset. These social platforms have the attention. we're going to now shop in that environment. That's going to affect media, that's going to affect retail, and that's going to affect the product
Do
service
the
industry.
social media companies make money on this?
Yes.
So
Again, they
this
make
is
8%.
good for Twitter and good for maybe some of these other companies.
There's no shot in 2025. I can't wait to come back in 6 to 12 months when this happens. There's no shot that Meta, TikTok, YouTube, Google are not going to be yelling and screaming about this. X will have this. This is too big. It's happened.
Who's the best at it so far?
TikTok.
Yeah.
And it's not even
Tell us
close.
the name of an influencer or two that you think have made a ton of money from this or are leading this.
You know, it's funny.
And what do they do to be so in front?
So what I'm paying attention to more is the brand. So Mary Ruth Organics is a brand that's really doing
What
this
do they
well.
sell?
They're selling their vitamins. It's kind of a modern vitamin company. You saw, it was funny, I was talking to Mona and Dustin in the back. You showed the top 3 things that were selling, right? T-shirts, vitamins, and beauty. And I looked at them and said, all 3 categories that are crushing right now on live social shopping. Abercrombie and Fitch. I don't know if you're paying attention that they're getting a reboot. And then there's also, I think you guys covered this on, I don't know if specifically you, but Chili's, the restaurant company, there was one TikTok, this is not live social shopping, this is just social. One TikTok that went viral that represented 40% of its Q3 growth. One TikTok that went
was it?
viral.
What
It
was
was a triple cheese quesadilla. It wasn't even a limited time offer.
That's
Again, mango gummies, private label mango gummies from Walgreens, the ocean spray thing that was well covered. I'm
We have
telling
to
you.
go, but I have to make a point.
Please.
Is that one of the, what do you call it, postmortems on the election?
Yes.
Was that the Trump administration understood TikTok in a way that Biden, the Trump campaign in a way that Biden didn't. And I think what you're talking about now is investors need to understand it.
The battleground on social will impact every single stock on the market.
Gary, really fascinating. Thank you for coming
Thank
in
you.
today. Great to see you.
All right, coming up, how President-elect Trump's tariff plan will impact prices and growth in the U.S. But up next, we head to the farm in search of the perfect Christmas tree. Contessa Brewer has a preview. Contessa, where are you?
I am in upstate New York, and let me tell you what, you guys wish you had smell-o-vision because it smells amazing out here. 25 million to 30 million trees expected to be sold in the United States this year, and this is the biggest shopping day of them all. But the inflation worries are real, and tariffs aren't helping. We get into it all ahead on Squawk Box.
Welcome back. 'Tis the season to pick out the perfect Christmas tree. But are tree farmers feeling the pinch this year with all the headlines and drought and hurricane damages, shortages, and yes, inflation? Contessa Brewer joins us now from upstate New York, separating the forest from the trees. Tell us, Contessa.
Okay, well, so first of all, the industry says yes, supply is tight. It has been since 2016, especially in places like New York City, you know, where there are a lot of shoppers for Christmas trees. But look, you go 2 hours north, I'm surrounded by trees. There's lots, in spite of those startling headlines that you mentioned, Steve, the impact of the Northeast drought. A local tree farmer talked me through it, and he goes, look, the seedlings were affected. Those are the trees that suffer. The mature trees that are ready for market have deeper roots, and they can withstand the drought. More than half of the Fraser firs in the nation are produced in North Carolina, and that, of course, got slammed by Hurricane Helene. The Christmas tree industry there is worth an estimated $250 million, and there was pockets of deep damage. I mean, one family farm lost 60,000 trees, but the industry says, as a whole, the bigger headache was getting those roads and bridges repaired to get the trees to market. That happened. In fact, the White House is intent on highlighting North Carolina's tree industry, choosing its official tree from the state of North Carolina. And the National Christmas Tree Association, which is part of USDA, surveyed growers who said this year their biggest concerns are labor. Most of the workers come through on H-1A visas, so immigration top concern. Wage inflation is a worry. Trees are an especially labor-intensive crop because they have to be pruned every year by hand. It's expensive. And 60% of the growers told the association they are holding wholesale prices firm this year. That's because the number one concern is consumers pulling back on their spending. Now, Christmas trees are grown in all 50 states, including, I was shocked to learn this, Hawaii, which has more farms than Alaska does. It says last year nearly 22 million trees were sold nationwide. 14% of consumers that the association surveyed bought a real tree, medium price, $75. Here at Adams Fairacre Farms, they say the prices are holding steady. They're not going to change that, but that could change next year. If the Trump tariffs on Canadian imports hold, 20% of these trees come from Canada, and those trees pay no additional duties. If that changes next year, if there's 25% price hike on them, we'll see what happens to the price of all trees. Also, artificial trees mostly come from China, and guys, you know this already. They are now facing even steeper tariffs, a top concern for Balsam Hill, which is one of the leading providers of pre-lit artificial trees as well.
Contessa, you're in Ulster County, which is where I grew up, and we always got our tree locally. I'm surprised that 20% of those trees are coming from Canada. And what is the average price of those trees that you're looking at?
Okay, so these, for instance, right here are from Nova Scotia. And Adam says they are typically more expensive anyway. But look, here you're seeing, I mean, they get premium Fraser firs. You can get a little tree, a balsam tree, for 14 bucks if this is like the Charlie Brown tree or things like that. But you want to get a beautiful big tree to fill up your high cathedral ceilings, you're looking at $400 here. They have beautiful trees. The big ones are way in the back, and I can't even lift them. But, you know, the prices vary. That's going to happen across the nation. You can still get the treetops. And what I have read from a lot of the farmers in North Carolina is if they had tree damage, they're trying to shear off the top 4 feet of the tree. It was an 8-foot tree. They could have commanded top premium price for these Fraser firs, and instead they're having a little treetop tree that, you know, they might get 20 or 30 bucks for.
All right, Contessa, stay warm.
All right, coming up, how President-elect Trump's tariff plan will impact prices and growth in the U.S. Squawk Box. We'll be right back.
Welcome back. This Black Friday, some retailers are urging customers to buy now before President-elect Trump's proposed tariffs take effect. Joining us now to talk the potential economic impact of these plans, Carl Weinberg, High Frequency Economics Chief Economist. Carl, thanks for joining us this morning.
Nice to see you, Steve. Happy Thanksgiving.
Yeah, happy Thanksgiving to you. Listen, I wanted you to help me puzzle through the math on this. There are three offsets I can think of to the tariffs. One is that the producer eats some of it, the retailer in America eats some of it, and some of it's offset by currencies. Does all of that work to seriously offset, somewhat offset, or not offset to any great degree the economic impact of tariffs?
Right, so you're right on all three counts, Steve. What we don't know anything about is we don't know anything about what the currency is going to do. And it could go up, it could go down. Economists aren't really good at predicting that, and the impact of a tariff is a special and complicated case. I think before we talk about who eats the cost of it, we want to go back to 2018 and just talk about those tariffs, because there was no impact on consumer prices at all that we can see at High Frequency Economics out of that round of tariffs. And what happened back then, which is very different from what's happening right now, is that tariffs were placed on selected goods, none of which were consumer goods. So they were all intermediate goods. So there was no CPI impact. So if the reasoning is that these tariffs are going to do the same thing now that they did then, just more of that, that's wrong, because these will affect the prices of consumer goods that are coming across the border, all of our borders, so there will be a price increase. But you're absolutely right, Steve.
More importantly, though, you said in your notes, I didn't realize this, that the 18 tariffs were specifically crafted not to include anything in the CPI.
Well, either they were specifically crafted, or it was an enormous coincidence that they missed almost all consumer goods. But shoppers at Target didn't see the prices of stuff go up at Target. The toys and consumer goods and small things and electronic goods and Apple phones and all that stuff, they didn't go up in price, but things that went up were things like capital equipment, machinery, parts, cars, parts for cars, things like that, chemicals, other things, intermediate products that affected companies. But remember, Steve, for companies, the cost of capital goods and the cost of input materials, they're only about maybe 15% of the total cost of producing everything. 80% of the cost of producing everything on average across the economy is labor, and that's unaffected by tariffs. However, this time, consumer goods are going to get hit.
Okay, do one more piece of math for me in our Econ 101 Thanksgiving Black Friday day. Why does the dollar strengthen when President-elect Trump threatens tariffs?
I don't know. I don't have a strong theory. I think in the markets, people are believing that there are going to be some inflationary impacts from the broad scope of policy proposals. That's maybe right. It's probably not as right as people think it is, because things like tariffs don't really cause inflation. They cause a one-time change in prices, which could become inflation. But
I think
the knock-on to that is interest rates.
The reason might be, Carl, the reason might be is because you're going to have fewer dollars circulating in the global economy, and so in the shortage of dollars, people would pay up for them because there's less trade as a result of the tariffs. That's why the currency was strengthened.
Stephen and I applaud your thinking like an economist there, supply and demand for currency. But you know, every time the price of oil goes up $10 or down $10, all right, a lot more world trade is affected than is going to be affected by these tariffs. And that doesn't seem to knock the dollar either. So every once in a while, supply and demand of dollars affects the value of the currency, and a lot of the times it doesn't. Same thing with interest rates, which is what I think the market is thinking about now. I think the market is thinking that the Fed is going to have to pause cutting right now because there is a risk of inflationary policy, and while they can't act on that risk of inflation, they can pause to wait to see how it plays out. And this is what Chair Powell has been telling us. He's been saying, we've got room to pause. We don't have to be in a rush to ease because the economy is so strong. So I'm suspecting that the Fed is going to take advantage of the scope that it has to take its time cutting rates, to not let rates get too low just in case they have to reverse course. And in the meantime, the economy is doing just fine and doesn't really need an immediate rate cut to keep on going. So I think there's a really big question mark over that December rate cut that the market is pricing in. And that could be a basis for people buying the dollar right now, because right now, this week, it looks like rates might be on hold for the Fed, and that generally is considered to be a positive for the dollar. Whether there is or not doesn't matter. People believe it, and I think that might be what's driving it.
And Carl, in your math, how do you account for, or do you account for retaliatory tariffs? We saw an interview from Christine Lagarde in the FT where she was urging Europe not to retaliate with their own tariffs, but in fact to buy more U.S. agricultural, defense, and other goods. Did we see an impact from retaliatory tariffs in 2018, 2019, and do you expect that this time around? How does that filter through?
Yes, so in 2018, 2019, we saw tit-for-tat tariffs. So the things that they tariffed that we export were things that also were intermediate goods and not necessarily consumer goods. So the impact worldwide of this tariff increase was very muted back then, but that's different from across-the-board tariffs. Now, the real question, which I can't answer because I'm just a simple economist, right, is why is Trump asserting that he's going to do this? Is he actually going to do this, or is this a negotiating tool? Right? It's stated, as he declared it on his posts, that what he really wants to do is he doesn't want to put tariffs on these countries at these rates. He wants to slow the flow of people and drugs across the border, and he wants to compel, particularly Canada and Mexico, to do something about it. So let's wait and see how this all plays out. The presidents of Mexico, the Prime Minister of Canada have already been on the phone with Trump. His people haven't even gotten to their offices yet. So I think this could very well just turn out to be a negotiating ploy.
Thank you so much, Carl. We have to go. Guys, thanks for indulging me. This was a conversation I was going to have with Carl on background, because he's one of the guys I go to on this stuff.
That's really
So
interesting.
I said, I'm going to anchor. Why not have the whole conversation on air? So that was me reporting right there.
That was good.
All right, up next, a list of hot must-have tech gifts for the holiday season. Wall Street Journal tech columnist Joanna Stern will join us. I will tell you of the things she's looking at. I want 2 of them. I have 1 of them.
It's not the
there's
page
another one.
turner, is it?
There's not one I am ever getting. We'll be right back. By the way, check out the futures on this holiday shortened trading day, up across the board. It's 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Steve Leisman and Robert Frank. Joe and Andrew are both off today. Among today's top stories, the Federal Trade Commission launching a broad antitrust investigation into Microsoft. The government looking at whether the company is violating antitrust law in software licensing, cloud computing, cybersecurity programs, and AI products. The FTC has reportedly opened a probe into Uber's subscription service. The agency is looking into allegations that the company automatically signed people up for Uber One, making it hard to cancel. And Black Friday shoppers are coming out early, searching for bargains. The door is just opening at the Mall of America. That is the nation's largest shopping center in Bloomington, Minnesota. It's just outside Minneapolis. The National Retail Federation predicts nearly 132 million people, or 72% of Americans, will actually shop today in store and or online.
But there's no stampeding and no trampling and no...
You know, they stopped doing that for a while. It used to be Walmart that would do it, but there were
TV,
problems.
that was
Well, it was not.
sale.
There were actually big problems.
Yeah.
At first, it was stampeding issues that we had problems with, and then it was the issue of not wanting to make your workers work on Thanksgiving and come through. And that was something during the COVID pandemic that they really reached out to the workers who were on the front lines all the time when everybody else was working from home. That's when things changed.
And now you have a nation of disappointed TV producers right now that are looking for the video.
Hey, well,
And no video. Come on, people!
Santa, there's some people piling in here. All right, let's take a look at the futures this morning. We've been in the green all morning long. Right now, it looks like the Dow futures are up by about 120 points. S&P futures are up by 11. You've got the NASDAQ indicated up by about 40 points. And let's get right down to Mike Santoli. He's standing by at the NYSE. Mike, we saw a little bit of a pullback on Wednesday, but right back at it this morning.
Absolutely, and even with that pullback, Becky, I think the majority of stocks were up on the day. So it's actually been upward drift has been the rule. That's what history says to expect around the Thanksgiving holiday. It's kind of what we're getting. The S&P 500 year to date, it was up 21% into the election. It's tacked on 4% since then. You obviously have a more resilient than expected economy. Inflation has continued to come down all year. Earnings broadening out. And then you have NVIDIA adding $2 trillion in market cap in the first half of the year. That was a big head start for the S&P 500. So here's where it sits right now, about 25% year to date. Again, sometimes a little bit of a pullback in early December if you care about the seasonal patterns, but generally a stronger than flat finish. Typically, take a look at the consumer discretionary sector broadly defined. This is the equal weighted ETF for consumer discretionary. So it's not just retail. Retail, if you take out Walmart, Costco, that's been the bulk of the strength in the retail sector with some individual chains doing well around that. But this really includes travel, restaurants, obviously autos, but also home-related, home building. And that's for over a 2-year basis has maintained a lead over the equal-weighted S&P. So essentially you can question about whether the consumer's getting spent out or getting a little bit squeezed. The performance of this sector suggests that the consumer, broadly speaking, remains in healthy shape with wage growth and relatively low unemployment. Take a look at the U.S. versus the rest of the world. A little bit of a change story here over the last couple of months, actually. ACWX is the ETF for all stocks in the world outside of the United States. So this is the S&P 500 US. You see that, it was outperforming because of our tech stocks, the rest of the world, but basically in a similar trajectory and cadence until we get to September, and then we see S&P up, rest of the world down. Obviously, Fed cut around that point. Maybe it said the U.S. is definitely going to sidestep an economic slowdown. And then you had, obviously, the election push coming thereafter. So an interesting little bit of a divergence here between world markets. We'll see if that can last. It is now a consensus trade, I think, that the U.S. should continue to outperform.
Mike, I want to just take for a moment. Can we put everybody, the four of us, in box? Because you've got 4 former print reporters here, all of us from the Wall Street Journal family, Barron's, Dow Jones. My favorite story today from print publications, I'm just going to do this with the 3 of you guys right now. There is an AI granny that these guys put together, an AI-generated granny that a telephone company in Britain is using her to go after scammers. When the scammers call, and they get the AI granny, she tells you all about her cat named Fluffy. She tells you about the bird she's looking at out the window. She tells you about how she'd love to help you with what you're telling her about, but she just doesn't quite understand this internet thing, and could you explain it again so I could type it in? They had one scammer that she kept them on the line for an hour trying to help her put www into the internet so she could give the money where he was saying to give it. They are driving the scammers crazy by using this AI generated nanny or granny to waste their time.
It's genius jujitsu, because often scammers target the elderly because the elderly just love someone to talk to for a while. So this is like using that tendency or the reverse.
Put them right back on it. It's my favorite story
The
that
next
I've read
step,
today.
though, is the AI scammer who can figure out who the fake and real granny is. Like,
Right. Well, if she's got a cat named Fluffy, I guess.
The scammers will have AI grandson who's be glad to tell them
Scamming
about
the AI doing the jujitsu and the whole thing. Anyway, it's my favorite story, and I figured this panel in particular might appreciate it.
I'm surprised there's actually something AI can be used for that's good right now. It's
That's
like,
awesome.
rather than making things worse. I'm just,
There's a lot of good.
a lot of
Thank
good.
you. We'll see you later.
all
I
right.
invented that, by the way, Becky.
What's that?
My voicemail is like
Hello?
40 seconds long.
What is it? I'm sure you can just pick up the
It
little-
says that. No, it says that. In order to
Oh, I'll have to call that.
yeah, I've been
Find
doing
out
that
what
for a
you're saying
while.
for 40
You should-
seconds.
40 seconds. Our next guest says he expects the Fed to pause rate cuts in the first half of next year, and for 10-year treasuries to yield about 4.25% to 4.5% at that time, before falling below 4% by the end of next year. Let's bring in Gennady Goldberg, head of U.S. Rate Strategy Team Securities. Gennady, good morning and happy Thanksgiving.
Happy Thanksgiving. Thanks for having me.
Okay, we're here at an interesting time because maybe you can explain to us. We went home on Wednesday afternoon. We had a 210 yield spread of about 5, call it, and then we come in and it's like 1. What's going on? Why are we flattening on the curve this morning?
Well, today's a little bit of a strange day. We've got early close. We've got month end. There's a lot of extension flows. There's a lot of buying that typically happens around the end of the month. I'd be a little bit cautious about reading too much into today's price action.
Okay.
The rates have moved off the highs.
So let's talk about what you think the Fed is going to do here. We have a cut still built in for December, hanging a little bit by a thread, but it's still 65% or so. And then you got to go till May, so the next one's priced in. What's your expectation? Does the market have this right?
I think so. I mean, we do expect one more cut in December. Obviously the Fed is still going to make up their mind on that one. But I think by the time we get into January, they're going to want to pause. They've already been sending signals that, they're going to slow down. And I think between the kind of the desire to pause because of the macro data and potentially the desire to pause around the tariffs as well to see their impact, we expect basically a pause in the first half of next year and then a resumption of cuts in the second half.
Gennady, let's pretend that we're around the Thanksgiving table here and your relatives aren't making fun of what you do, which is what happened to me all day yesterday when they ragged on me about economic stuff and things like that. And they, in fact, let's pretend they were interested in what you do for a living. And you had to advise them on how to and what to buy in terms of fixed income. What would you be telling them right now?
I would say this is a good time to get in for the long haul. I mean, you've got fixed income yielding the highest levels or some of the highest levels in decades. You've got real rates quite high. So, be very cautious, but buy U.S. Treasuries and wait for the long haul because I think these are great levels here.
But when you say long haul, would you tell them to buy 10-year treasuries? Would you tell them to buy 2-year treasuries? Everybody's been doing the 2-year thing and then rolling it over. And then I try to explain rollover risk and they yawn and go on to the pumpkin pie.
That's always a difficult one to explain. I think 5 to 10 year space is probably the safe bet right now. The curve, as you mentioned, is quite flat. You're not really picking up a ton to go further out the curve, but you're not losing a ton either. And that's the lock-in risk. I mean, if you look at the last 15 years or so, rates look extremely attractive. And if you look at the last 20 to 30 years, real rates look extremely attractive. But I think this is a good place to lock some of those in and extend some of that duration.
Do you extend it all out in terms of risk? I'd say the corporate bond market, are those places you're advising clients, or let's say your relatives over Turkey?
Definitely try not to advise relatives over Turkey. That's always a dangerous one. But I do think that IG credit is extremely tight, so you want to be very cautious there.
Right.
That's the tightest level in 30 years. You want to be very careful about what you do here, but the all-in yields, right, on IG credit and on treasuries are extremely attractive. So in my mind, it actually makes a lot more sense to just buy, 5 to 10 year treasuries and
Okay.
not risk some of that tight credit.
Gennady, thanks for joining us this morning, and happy holiday.
Happy holiday.
All right, coming up, our next guest has a list of top gifts in tech she's eyeing this Black Friday. The Wall Street Journal's senior personal tech columnist Joanna Stern joins us now. Joanna, great to see you. So I'm really interested in the fitness stuff that you have here, because that's my thing. You've got Garmin, you've got Oura, you've got the Pixel watch. What is your favorite of those and why?
Oh, I'm an Apple Watch wearer, but I am really considering this Oura ring this year. This is the Oura 4, and it's just built this huge cult following, and mostly because you don't have a screen on you. This is a wearable that it just exists, but it doesn't really look like a wearable. And so they've improved this version with better tracking. They've got better sleep tracking. Costs $350, but we're really seeing this big movement throughout the tech industry to look at rings. We're seeing Samsung. We're hearing rumors of Apple. So rings. Get on it and get your ring.
One ring to rule them all. Somebody had to say it.
I was surprised that your list didn't include a lot of AI-driven things. I thought we'd see AI drones, AI dog robots. I thought we'd see AI-enabled everything on this list. Is there any reason for that, or is there anything on the list that to you does stand out as sort of the AI play on tech gifts this Christmas?
I'm putting on my glasses here because the Meta glasses, I'm going to tell you, I love that you asked this because AI gadgets have just been complete hype right now. There are lots of startups trying things and it's just not worth it. The only AI gadget that's worth it right now are these glasses because the main focus is not AI. Yes, I've got cameras here. I can take photos, can take video, put that on my phone, quickly get that, share that with friends and family. But they also have Meta AI built in. So I could say, I'm not going to say it on there because it will trigger it, but I could say, Meta, tell me about CNBC Squawk Box, and it will give me an answer right now. And so this is really, I think, this is sort of a passive AI experience, but it is the best AI gadget experience you can get right now.
And Mike Allen from Axios was on telling us earlier that Zuckerberg brought those to Mar-a-Lago, and I don't know if Trump tried them on, but he was certainly selling them hard. Do you have to tell people that you're wearing those when you're talking to them, that they're being recorded? How does that work?
Yeah, it's not on right now, but if I press this button, I start recording, or I say, hey, Meta, start recording. I want to say it because it's going to happen. A little light shows up.
Yeah, so
and
if you're hip to it, you know that it does it, but it's still, there are some privacy questions about it. I think, but I guess you could say the same thing about phones in general. People could be recording you on any phone.
Yeah, but you have to hold it up to them. This is different.
You can video record. I mean, you can audio record like anything, even if your phone's not up right now.
Now, this is one of my biggest criticisms of the product, and I told Meta this. I mean, they've made that light larger, and it pulsates now when it's recording. So they have done a lot to make some progress here. But I also think these are now a couple years in. People are more familiar with them, and so this is going to be the wave of the future. We are all going to be wearing glasses at some point.
CIA has been recording you guys with glasses for years. I don't know what you're so uptight about.
I want to highlight an item on your list that I just couldn't believe existed, and it reminds me of WALL-E, the movie, when we're all just giants sitting in our chairs drinking our meals. The Datify page turner. Why is that on your list, and what does it do?
Well, I think this is hilarious. This is if you don't want to turn the page on your Kindle while you're sleeping, because your hands could get cold. I guess look, life is hard, okay, and so you get this little remote that connects to the Kindle on this stand, and so you can turn the page while under your covers.
When we're too lazy to even turn the page on our e-reader, it's all over.
Joanna, I loved a bunch of the things that you have. I have the Meta glasses. I want the Oura ring and the new version of the earbuds.
Noise canceling.
Well, not just noise canceling, the ones that you can use as a hearing aid. I think that's pretty cool. That sounds incredibly useful. The one thing that you had on there that I thought, no way, no how, never, was the $1,000 garbage can.
look,
What gives?
garbage smells.
The mill.
The mill, garbage smells, and if you want to get rid of that garbage smell, it's going to cost you $1,000. This is an incredibly clever product. Yes, it's meant to be for those that want to be more green and eco-friendly. But what you do is you put your garbage in here. Overnight, it warms it, it pulverizes it, and so it comes out as sort of like coffee grinds. Like you're seeing this here on the video. That's how it comes out. It removes the smell, and then you can use that as fertilizer in your garden. You can actually send it back to the company. So yeah, $1,000 and for your garbage to smell better.
I gotta say something about
This
this,
is
Becky.
meant for
We
the
tried the
CNBC viewer.
composting thing, and it didn't work because we didn't do all this stuff for composting.
Yeah.
This does it for you. It may be the
but
right thing.
I can't imagine this will always
$1,000.
work.
It's too
and if
expensive,
it doesn't
but-
really work right, that's going to be a smelly mess.
Yeah.
You don't want to hear that your garbage can is broken? Your garbage can ran out of power? It's
Take it in for
it's
repair.
2025.
All right, Joanna Stern, thanks so much for joining us. Happy Thanksgiving.
Happy Thanksgiving, guys.
Thank you. When we come back, will it be a deep discount shopping season for retailers as we watch the shoppers hit the malls and outlets this morning? We'll get a forecast from former Walmart U.S. CEO Bill Simon. That's next. Plus, coming up at 8:30 a.m., former FDA Commissioner Dr. Scott Gottlieb will join us. We'll chat about everything from Trump's health team to anti-obesity drugs on this morning after Thanksgiving, when all of us feel like we could use it. Squawk Box will be right back.
So.
Well, as you probably know, it's Black Friday. Adobe is already out with some new data on shopping. Consumers spent just over $6 billion online on Thanksgiving Day. That's up about 9% from last year. Shoppers finding some pretty great deals when it comes to things like toys, with discounts peaking at just over 27%. For a look right now at what's in store for this retail, the holiday season, is former Walmart U.S. President and CEO Bill Simon. And Bill, thanks for being here. Those numbers from Adobe pretty strong. You think that carries over into in-store shopping as well?
Hey, good morning, Becky. Yeah, I do. I think I'm expecting a very good selling season. I think the consumers, breathing a sigh of relief that the election's over and all the noise from the election is kind of quieting down, whichever side you ended up on. I think there's just a general kind of consumer relief, and we're moving forward. And it's been extended over several days. It's happening online. You've got a situation where margins have been pretty healthy in retail. Some succeeding. Walmart reported traffic up and sales up. Target had decent margins, but traffic and sales down. So I think it's going to be an aggressively promoted holiday selling season. The consumer is going to benefit from that.
Meaning that there are goods in the stores and they have to move them, so the prices will come down starting now?
Well, they're competitive, right? This is your time to make your number for the year, and most of the retailers have had pretty decent margins throughout the year, and so they could sacrifice a little bit of margin for some sales volume, and I think you'll see that especially in the ones that have been struggling throughout most of the year.
You said categories like apparel and home, you expect to see a little more momentum. Those categories have been soft for a couple of years now.
Yeah, they've been close to dead for several years, flat to down, and Walmart reported in their last quarter the first positive same-store sales in those categories, and I think in about 11 quarters. And if that trend carries through, that'll be a really nice tailwind for some of the department stores, Macy's, Kohl's, and some of these guys who've really been struggling lately.
One of the things that Jan Niffen said when he joined us earlier is that consumers are maybe moving back in more force into goods. That consumers have looked around, have realized that when it comes to services, there's more inflationary pressure. Prices are up there. When you look at things like a sweater, a pair of pants or something, you think, well, maybe that's a better deal because the inflation hasn't hit as hard there.
Well, I think inflation in service is by definition labor driven, right? Because you're buying a service, and labor rates have gone up high, inflated at a higher rate in some cases than products and goods. And I think once we've sort of probed the complete extent of all the services that are available, you sort of go back to, well, that was a wonderful experience, but I don't really own anything. And I think you'll start to see some of that as well, especially in these categories that have just been beat down, just really beat down. And the retailers that work in those areas, I think, will stand to benefit from that.
Black & Decker saying that it may get ahead of some of these looming tariffs by raising prices. Do you expect to see that in other places? In other words, would the lesser relative inflation we've seen in goods, you expect that to turn around because of these potential tariffs?
I'm not really concerned about tariffs at this point because mostly it's noise at this stage. There's a threat of a tariff and a threat of a retaliatory tariff. Where the tariffs actually end up are one thing, and then, as you know, Becky, there's a ripple effect, right? So there's a tariff on tequila. Well, I won't drink a margarita, I'll drink a mojito. And so the consumer impact on it isn't really carried through till the second or third or fourth ripple. And so I think anybody who's pricing in, potential tariffs at this point is doing so because they're trying to grab some margin while they can.
Becky, I need to do a little reporting with you real quick.
Mm-hmm.
From that Adobe data, I just got a little concerned about it not being seasonally adjusted. We are 27 days from Christmas, if I'm not mistaken.
Yeah.
Last Thanksgiving was 32 days.
Right.
How much of a difference does that make in how much spending might have happened on Thanksgiving Day? I don't know if Bill wants to weigh in on that too.
It does make a very large difference. I mean, with a shorter selling season, it's much more compressed. I don't know whether the math equates to that 9% that Adobe's reporting or not, but it does make a lot of difference, and that's why I think you're going to have a real intense period here between now and Christmas.
We want to be a little careful in some of the comps that are out there in terms of comparing what you're seeing in the data day by day or whatever, even week by week.
The Adobe data was simply for money spent online on Thanksgiving Day.
Versus last year.
But
on
you're
Thanksgiving
right,
Day.
this is closer to Christmas than it was last year by 5 days. But we'll see. They have a full report that comes out at 8:30, so we can dig a little deeper into it. And we just have the headline numbers right here. But Bill, thank you. It's great talking to you.
Yeah, we'll see you. Thanks.
Okay, see you later.
All right, coming up, the snow economy. We hit the slopes. The CEO of Killington Resort will get his forecast for the ski and the snowboard season. Don't forget snowboarders, which is already underway in Vermont, and the shoppers are getting those early bargains. You're looking at pictures from the Westfield Mall in Paramus, New Jersey. Pretty busy there. Squawk Box. We'll be right back. Our next guest can give us his outlook on the ski season, the state of the consumer, and of course, this year's World Cup. Let's welcome Mike Solimano, the president and CEO of Killington Resort, the largest ski and snowboard destination in the Northeast. This weekend, Killington hosts the 2024 Stiefel Killington Cup for the 8th season. Vermonters will be rooting for their hometown favorite, Michaela Schifrin, poised to win a historic 100th World Cup victory. It airs live starting on NBC, on Peacock. Mike, thanks so much for joining us. Great to see you. So I see snow behind you. Is that natural or made?
It's a mix of both. We've been making snow for a couple weeks for the World Cup race right behind us, and we got about 2 feet of snow in the last day or two. So, wow. And it's snowing really hard right now. So it's all, everything's lining up for us.
So very exciting to see that cup going on this weekend. What does business broadly look like right now? What do you see in terms of demand, in terms of sales of seasoning passes? This weekend coming up is typically the start of the ski and snowboard season for a lot of people. What does demand look like?
Business is really strong. Yeah, we've had the last couple of years have been really great for the resort, and preliminary sales for the year are great. I mean, for us, the most important thing is good cold temperatures and good snow. I think that trumps everything else, the economy, everything else. So for us, business continues to look really bright.
And I started snowboarding way back in the late 1980s in Vermont, Stratton, Killington, and back then a daily lift pass was around $35, $39. Right now I'm looking at your website, it's around $150 going through December, January. How has inflation affected that, and why has it gone up so much to ski and snowboard right now?
Yeah, I mean, definitely lifts and snowmaking it's an expensive, capital-intensive business. So that's definitely one of the challenges for us. But, there's still a lot of great value out there. We have a Beast 365 pass, which allows people to ski, mountain bike, golf, all for $140 a month. So we've got some really great deals out there. And, most people really aren't buying the window ticket.
Yeah, Mike, how did you guys do this? That all of a sudden, for a 20-something kid, getting the yearly ski pass is just something you do every, summer or fall? They go in, and you have made this to be something that everybody gets every year now.
Yeah, we've been trying to become more of a year-round resort. So we've been expanding our mountain biking, and we've had golf for a long time. So we created this pass that you pay monthly, and you can use everything we have. And so that's been continuing to grow, and it's really been good for Killington, for our local community, and all of Vermont to really bring people to the state on a year-round basis.
And Mike, you were recently sold, I think this summer, there was a deal to sell the company from Powder, your previous owners, to a group of investors who are longtime Killington customers, I guess. Tell us about that new ownership and how does that affect your investment? What can people expect from the mountain going forward based on these new owners, and what does it mean?
Yeah, really bucking the trend in the industry. As many people know, a lot of the ski resorts have been getting consolidated, and we were part of one of the larger groups and ended up being sold to a group of local families, which was really exciting. Most of these families have had homes in Killington for decades, and they just really care about the mountains. So not much is going to change. We're going to still continue to deliver great product for our guests, but we're going to be able to invest more of our cash flow into the business. That's the main goal. We announced next year $30 million capital investment. The lift behind me, Superstar, where the Stiefel World Cup is happening, is going to be replaced. And we have 2 gondolas here, and one of the gondolas is going to be replaced. So a lot of investment. People are going to really start to notice all these improvements at the mountain.
All right, Mike, we're going to be excited to watch the Stiefel World Cup this weekend. Thanks so much for joining us. We appreciate it, and happy Friday.
Thanks. Come visit us. Thank you.
When we come back, former FDA Commissioner Dr. Scott Gottlieb on everything from anti-obesity drugs to the big health challenges facing President-elect Trump's second term and his new team. Square Flex will be right back.
squawkbox.com/TV.
Welcome back to Squawk Box on CNBC. Looking at futures, down a little weaker than we had been. Up 65 on the Dow, 18 on the Nasdaq, 6 on the S&P. Becky was reading bigger numbers before. They're down a little bit now. Treasuries, we're flattening the curve this morning. The 2-year at 419, the 10 at 421, to call it 440, 4398 on the 30-year. And then moving on, looking at Bitcoin, another one of our major metrics here. Up 2.2%, which is $2,100 to nearly 97. Do we top 100? And when I think we were there intraday one time. We're here.
Yeah, we'll get there. It's inevitable.
Yeah.
Shares of Applied Therapeutics are plunging after the FDA declined to approve its drug to treat a rare genetic metabolic disease. It was set to be the company's first commercial product. The FDA's letter to the company said the marketing application for the drug could not be approved in its current form due to certain deficiencies. Applied Therapeutics is reviewing that feedback and plans to immediately request a meeting to discuss requirements for resubmission.
There has been a lot of big news in healthcare over the last few days. President Joe Biden proposing expanding Medicare and Medicaid to cover obesity drugs. That's a move that could impact millions of Americans. Meantime, President-elect Donald Trump has made all of his picks for the health-related team, and joining us right now to talk about all of this and what it means to the sector is Dr. Scott Gottlieb. Of course, he is the former FDA commissioner under the last Trump administration. He's also a CNBC contributor, and Scott, you're still a board member at Pfizer as well?
That's right.
Okay, and a board member at Pfizer. Let's jump into this, and why don't we start with the incoming administration's choices, because there's been a lot of consternation, a lot of people who have said, wait a second, with RFK Jr. heading things up. What do you say, as somebody who served in the last Trump administration?
Yeah, look, well, I have deep concerns about Kennedy's stated intentions to roll back core public health protections, particularly as it relates to childhood vaccines. He's brought in a very experienced team, a lot of lawyers from the Children's Defense Fund, which is his anti-vax organization. These guys are capable. I think they're deadly serious. They've been very clear about their intentions, and I think sometimes you have to take people at their word. And just to sort of level set where we are right now, we had 5,000 cases of pertussis last year. We're going to have 30,000 cases this year. Pregnant women, for the first time in a very long time, now need to think about pertussis as a risk during pregnancy. And if you look at vaccination rates for MMR, there's states that really are at the tipping point in terms of reduced vaccination rates. Herd immunity is achieved at a level of about 95% coverage. If you look at Idaho, it's at 79%. You look at Alaska and Wisconsin, 84%. Minnesota, 87%. Florida, Colorado, Oklahoma, Georgia, and Utah at 88%. When I was at FDA in 2018, 2019, all those states were in the low 90s. If we lose another 5%, we're going to be in a position where we see distributed outbreaks of measles, and that could easily happen in the next few years.
MMR, measles, mumps, rubella, pertussis is whooping cough?
Whooping cough.
So you're a physician. What do you worry about? What do you see?
Well, what I worry about is that we're at a tipping point where we're going to start to see epidemics of diseases that have long been vanquished. And God forbid we see polio reemerge in this country. This could happen in the next 4 years, especially with MMR. The measles vaccination rates have dipped to a point where we're at a tipping point right now. Another 5% down and we'll be there.
So you're saying people are going to die because of this?
No, but you warned about this. When you were at the FDA, you said because of vaccine hesitancy in this country, because of concerns about the COVID vaccine, you worried about what that would mean for all of these other related diseases and the vaccines that we have.
Well,
which vaccines should we be getting, which should we not? Because RFK Jr. has softened his stance. If you go back and look at what he said back to 2013, he talked about how vaccinating children and trying to cover up any problems from it is, he likened it to abuse by the Catholic Church, sexual abuse of children. He said that what the CDC was doing in 2019 with COVID vaccines was vaccine. He's talked about jailing vaccine scientists in the past. Now he sounds a little less strident in some of the comments that he's making, but you don't believe his.
Well, I don't think he's less strident. Look, this is a post-COVID environment, no question about it. And I was against the mandates. We talked about this on this show. I was against the COVID vaccine mandates because I worried that it would breed vaccine hesitancy. I think what you're seeing now is people coming into the political spectrum preying on that. And they're deadly serious about the policies they're going to implement. So what could RFK do? And he's committed to this. You know, he's committed decades of his life to this. He's not going to back away. They could disband ACIP, the advisory committee to the CDC, and issue new recommendations that are non-binding to states, giving states cover to move away from the childhood immunization schedule. They could frustrate the Vaccines for Children's Fund, which vaccinates 50% of all kids in the country. basically, for example, tying states that want to use that money to vaccinate kids to certain reporting requirements, like reporting on immigration status or religious status for children. Those are easy things they could do administratively, and that would make it very hard for states to take the money. I'm not laying out their roadmap. They know their roadmap, and this is their roadmap. I've been in policy. I know what these agencies can do, and I know what they intend to do. These are very serious people. He is smart, and his team is very capable around him.
So who have you spoken with in the Trump administration at this point, or in the incoming administration? You are somebody, again, who served in a Trump administration. What have you had to say to them about these?
Well, look, they know my views. I've been clear about them. I've had certain conversations. I talked to President Trump about vaccines in my first term. I don't think that these policy efforts reflect his views as well. I don't think the president wants to see a resurgence of measles, wants to see a resurgence of whooping cough in this country. God forbid we have cases of polio in this country. He does not want to see that. I think he understood the importance of the childhood immunization schedule. I'm not so sure that people really understand how Kennedy's intentions are going to translate into policy and how serious he is. There was an article recently where one of his confidants, Del Bigtree, who's going to be probably brought into HHS, said, you know, he didn't get inside the castle to forego his long-held beliefs. They're going to follow through on these.
What do you think of Jim O'Neill, the HSS?
Excuse me?
What do you think of Jim O'Neill, who's been appointed to HHS?
Yeah, I don't know Jim well. He was there when I was there. I think Marty's a good pick at FDA. Marty McCary at FDA. I have confidence in him. I do think Oz could be a transformative pick at CMS, the Centers for Medicare and Medicaid Services. If you think about today's senior citizens, they grew up watching him. I think if he plays an external role in that agency.
Doing what? What will he do? What does he want to do?
Well, look, I don't think he's going to sit over meetings all day figuring out, you know, Part B injectable drug conversions and the minutia of that organization. I think he's probably going to play more of an outside game trying to lead a health and wellness initiative for American seniors. I think he could be very good at that. So there are some qualified, very capable picks here.
Dr. Oz and Dr. McCary, by the way, practicing physicians who have both, I know people who they have both treated in their past lives as a physician. These are serious people too.
I know Marty, and he's a good physician and a really good thing.
Dr. Gottlieb, RFK has to be confirmed, right? Are you urging Republican senators to not confirm him?
Look, I think that there's skepticism in the Republican caucus, more than I think the press is reporting right now. There's going to be ag state senators that are concerned about his impact on food prices. There's going to be principled pro-lifers who are concerned about his positions on abortion. And there's going to be a number of public health-minded senators who have deep concerns about his position on vaccines.
If you were talking to a Republican senator, would you say that the appointment of RFK could cost lives in this country?
I think if RFK follows through on his intentions, and I believe he will, and I believe he can, it will cost lives in this country. You're going to see measles, mumps, and rubella vaccination rates go down. And like I said, if we lose another 5%, which could happen in the next year or two, we will see large measles outbreaks. For every 1,000 cases of measles that occur in children, there will be one death. And we are not good in this country at diagnosing and treating measles. If you look at the outbreak in Ohio, 30% of the kids were hospitalized. You look at the outbreak in Minnesota, 20% were hospitalized because we don't diagnose it quickly because doctors aren't accustomed
the ability to do it?
We lost the ability to diagnose it because doctors aren't accustomed to seeing it, and we don't know how to manage it in the healthcare system.
And by the way, if you have a new child, that child can't get vaccinated until what, age 2 or something?
That's right. And they're very vulnerable. And remember, maternal transmission of measles, congenital measles, causes serious consequences in pregnancy. So, you know, adults and women are going to have to think about, do I get a booster? Pertussis is certainly something people need to think about right now. Like I said, there's outbreaks in multiple states, and that's only going to get worse.
I worried about measles with my infants because they're not immune for a while. If you have older kids who are in the schools, if there's an outbreak or anything that happens there, you can't protect these children, even if you're staying at home with them all the time.
And remember, the CDC appointee is someone who's a very committed anti-vaxxer, and I don't say that in a pejorative way. I think he would own that label very proudly. He was a congressman when I was at FDA in the early 2000s. He sponsored multiple bills to withdraw the current MMR vaccine. He sponsored bills to do away with the liability protection that allows companies to bring these vaccines onto the market. He forced FDA to reformulate the existing MMR vaccine to take some of the preservatives out that we use, which ultimately led to an increase in cost of those vaccines and probably reduced vaccination rates. So he is very committed to this too.
Scott, people will look at this who are on that side of things and say, of course, that's what Gottlieb says because he's on the board of Pfizer and they're a big vaccine machine.
Well, we don't make the pediatric vaccines, so Pfizer's not in that market. This market is GlaxoSmithKline, Merck, Sanofi. There are other companies doing this.
You mentioned President Trump doesn't support a lot of these policies, or at least you don't think he does. What are the guardrails, whether it's Congress, whether it's other cabinet members, that could prevent all of these from happening to the degree that let's say RFK Jr.?
Well, look, I don't think there are guardrails, and I don't want to speak for the president. I think I understand his ethos, and I think he has a strong public health ethic as well as the people around him. So I don't think they fully understand how Kennedy's going to translate his actions into policy. I think some in Congress right now who are deeply skeptical think that they can manage this through things like appropriations riders. That's not going to be successful because, like I said, RFK can go in there with a stroke of a pen, disband ACIP, reconstitute it with like-minded people, issue a whole new bunch of recommendations. He can frustrate the ability to take the money from the Vaccine for Children's Fund, which would impede states' abilities to vaccinate children. There's a lot of things that they could do day one very easily, administratively, and I don't think there's a thing Congress can do. And that is dependent upon Congress getting bills through on appropriations bills that would actually tie the hands of CDC and Kennedy. And I'm not sure the will in Congress is there to do that.
Have you spoken with the individual senators about this?
I've had conversations and I've raised my concerns and I'll continue to raise my concerns.
Okay. Well, Dr. Gottlieb, thank you for being here.
Thanks a lot.
We'll talk to you again soon.
All right, coming up, big government versus big tech. The FTC launching a broad investigation into the tech giant covering everything from the cloud to AI, what this could mean for the stock and the rest of the tech sector. That comes up next on Squawk Box when we come right back on this holiday day. Welcome back. The Federal Trade Commission has launched a new antitrust investigation into Microsoft, scrutinizing the company's practices across cloud computing, software, licensing, cybersecurity, and artificial intelligence. Joining us now, Gene Munster, Deepwater Asset Management Managing Partner. Good morning, Gene. Tell us how seriously to take this threat against Microsoft.
Steve, on a scale of 1 to 10, I would put the threat at about a 2 or a 3. You framed in what the investigation is about. It is worth noting that Microsoft is the one of the mega caps that have been spared from the Department of Justice and FTC largely over the past few years. It's been 25 years since any kind of investigation has taken place. That's the state that it's in right now, Steve. It's an investigative state. And they're probing into, as you mentioned, kind of bundling of products. Sounds very similar to what happened with Explorer 20 plus years ago. But the reason why I think that this is a 2 out of a 10, I think there are a couple things motivating this. Number one, of course, there's a shot clock that is going to soon go off with Khan's term here. And I think there is a kind of a scrambling effort. And second, I think that the substance of what is being this investigation is around just simply won't hold weight. I think that there are some of the other bigger issues that the FTC is focusing on. I think this just simply doesn't pass the threshold.
Gene, can we come back to the substance in a minute? I just want to talk about the politics of it real quickly, because if you were confident the Trump administration would not continue this, it wouldn't be a 2, it'd be a 0. But are you confident that it will be dismissed or not taken up by the Trump administration?
So it's the simple answer is it depends on who is going to succeed Khan, and ultimately is the message from the Trump administration has been somewhat mixed on the topic of big tech. And so there's been times when some of these companies have been like Facebook, for example, Meta, kind of the enemy of the people. Recent comments earlier this year from Trump, but there's also this general belief from the administration that there should be a free hand, and that these regulatory features just don't serve business well and the economy well. And so my sense is, Steve, is that ultimately I think that that's why there's still a 1 or 2. It does. Right. There is some evidence that just for political gain, I think you could make a statement against one of these big tech companies.
So uncertainty over the politics of it keeps it a positive integer.
Exactly.
So let's talk about the substance, because we were talking in the last hour or so about this notion. As a consumer, I like the fact that some stuff works together, that it's all integrated, that I can go seamlessly from one part of an app or one function to another. So it's kind of, I guess, I don't know if the word ironic is the right one to use here, but that the very thing a tech company might do to make something more valuable to the consumer could get it in trouble with the government for monopoly practices.
There's a standard of care that you're getting to, which is what are the purposes, what are the reasons that the Department of Justice, the FTC, this whole antitrust initiative, what's the purpose of it? And of course, it has historically been to serve the consumer well, is to look out for pricing and relative to freedom for choice for consumers, all that. But you're exactly right, is that consumers have over time, over the last decade, have chosen this integrated approach. Just look no further than just the emergence of the Mag 7. That is evidence of this. And so ultimately, I think that that's another piece to this, that these companies are going to be fine, is that I think consumers will generally be more harmed than benefited if some of these pieces are pulled apart.
Gene, I think we're out of time on this, but thanks for joining us this morning and trying to take this apart. Appreciate it.
All right, coming up next, more stocks on the move this Black Friday morning. Squawk Box is coming right back.
That's fascinating.
All right, let's get a sweater check back over to Dom Chu with some of today's movers. Dom, good to see you.
All right, so here's what I got for you guys. All right, we're going to start with a check on shares of MicroStrategy, Robert, which are higher by just maybe 4% or so, 4.5% after catching a tailwind because Bitcoin prices are on the rise. The business software services and analytics company is a huge holder of Bitcoin. It's seen as a kind of proxy play. Those shares, by the way, have gained about 70% just since the election because the incoming Trump administration could be friendlier towards the entire industry, so keep an eye on MicroStrategy. Next up, you got shares of semiconductor stocks, specifically the chip equipment makers like Applied Materials, KLA Corp, ASML, Lam Research, and others. This is all after a Bloomberg report that the Biden administration is considering sanctions on China's chip business. We know that. But the new regulations may not be as strict and onerous as previous proposals had laid out. That's helping sentiment across the industry, so that Bloomberg report triggering some moves in the chip business. And then we're going to end with, of course, a check on the big retailers as things really get going in earnest on this Black Friday shopping season. So take a look at shares of Amazon up fractionally, Walmart, Target, Costco, even the broader Spider S&P 500 retail ETF ticker XRT is up north of 1% right now. So we'll see whether or not, Becky, that consumer wallet is as wide open as some of these retailers hope. I'll send things back over to you guys.
Yeah, Jan Niffen weighed in with us again and said that, yeah, if you're seeing a 6% increase on the online shopping that we saw from Adobe, that matters. Something like 300 basis points or something. He attributed that to the later seasonal adjustment, but he said that's still a big deal, and it does look pretty strong, at least in some of those early numbers. Dom, thank you. Let's take a final check on the markets as we get ready to hand things over. We've cut our gains in half this morning. Right now, the Dow futures are up, but only by about 65 points. S&P futures are still up by about 5 points. The NASDAQ indicated up by about 15 here. Obviously early going on this, but it is a holiday shortened trading day, so we'll be watching that as well. And for the month of November, it has been a pretty phenomenal one for the markets overall. It's been a phenomenal day here, too. It's been a lot of fun. I want to thank you guys both for being here.
Hallelujah.
Thanks, Stephen Leisman. We've been listening to some songs here. Thank you, everybody. That does it for us today. Make sure you join us next week. Right now, it's time for Squawk on the Street.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Sarah Eisen at Post 9 of the New York Stock Exchange. Kramer has the morning off. The futures are fairly steady on this final trading day of November. Shortened session. Stocks close at 1 Eastern. Bonds close an hour later. And speaking of bonds, 10-year 420 is about a 1 month low. Our roadmap begins, as we said, with the last trading day of the month. S&P on pace for the best month since February. Consumer discretionary, the top performing sector.
Plus, speaking of the consumer, a closer look at retailers' Black Friday strategies as shoppers across the country hit the stores.
And the FTC opens an investigation of Microsoft. It's an antitrust probe, but the big question, will it continue in the next administration?
Let's begin with the markets and this obviously strong November for stocks, guys. We mentioned some of the month to date, but you look at year to date, consumer discretionary up 25 for the year so far. Staples not that far behind with like 18.
It's been pretty broad-based, actually, and I'm looking at some of the month-to-date winners. Palantir, no surprise. Tesla's right up there. I think one of the more interesting stories this morning, you just mentioned treasuries. The round trip that we've seen for bond yields since the election, the 10-year yield is now at a level that is lower than where we were before the election. We're going back to end of October levels on the 10-year yield. What does that tell us about how the market is processing the economic outlook, the Trump policies? I will just say, potentially you have this rally in bonds today and a sell-off in the dollar on alleviated trade tensions, right? That has become front and center now that President-elect Trump put out on Truth Social that he had a very productive call with the Mexican leader, President Sheinbaum, and maybe different accounts, but both were very encouraging and sounded productive. That, according to him, she's going to do something about the border.
Yes.
And according to her, they've already been doing it.
Exactly. Her point is we've already been working on that.
But maybe it means less tariffs. I think for the market, it's like, okay, we can maybe not expect 25% tariffs on Mexican imports.
Yeah, we'll see. There is, as far as bonds go, sort of month-end short covering. We're down 30 bips since Bessent's naming, which is interesting too. Are there fears about NFP print coming up? We'll see. It's probably all in the mix.
So that's next Friday, and it is the big jobs report before the Fed meeting. All signs point to a pretty healthy job market, at least at this
point, and then if it's not, you can always blame the weather and the hurricanes, which did factor into last month's numbers as well. But after we got PCE, the Fed's preferred inflation number, exactly in line with expectations last week, maybe a little bit elevated, but in line. So core is still tracking closer to 3 than 2%. They don't want to see that. But does it throw them off the path of cutting rates in December? A weaker jobs number certainly would increase the chances that they would go in December, but the market's kind of already there, around 70% odds that they go.
We're going to talk a bit later this morning about sort of relative tech weakness, David. We mentioned this report on Wednesday from BTIG called It's Beginning to Look a Lot Like Tech Mess. NVIDIA, of course, actually bouncing a little bit today, but all the big ones have some sort of headline risk today, whether that's Microsoft, which we'll get to, Uber, of course we continue to watch Google, this Australian bill banning social media for kids under 16, now officially law.
Yeah, it will be interesting to see how they implement that. I know there's been some coverage of exactly how they can actually execute on that law. You can take a look at NVIDIA shares, which of course we track very closely for any number of very obvious reasons. A couple of weekdays earlier in the week prior to the holiday. You know, I've brought this up many times, of course, the pre-training models, the deceleration in terms of advancement being made there. Is it an issue? Do you need the same kind of computing power for inference as you do for training of these large language models? Some of these becoming questions. You continue to hear chatter about competitive chips somehow or startups and the like, which seems hard to imagine, frankly, particularly given the fact that NVIDIA is not just a chip, it's an entire solution, so to speak, and a lot of software, as Jim, of course, likes to point out any number of times that we discuss it, a lot of software is brought to bear as well to sort of make the data center a supercomputer, which is really what Jensen Huang talks about and what is essentially being done by so many of the hyperscalers.
The Spoke today points out it's sitting right at the 50-day, so we're looking to see which direction it travels. Of course, it comes on the heels of the Dell quarter earlier in the week. Got a downgrade of HP today as Best Buy's quarter didn't light the room on fire.
I think it's interesting that the market rallied so strongly even without the leadership of semis, which we've had previously in the year. I mean, we're up 5% on the S&P in November. We're tracking for the best month since back in February and just adding to already strong gains, now tracking best year for the S&P since 2021. And while semis have been a key leadership position most of the year, not so much in November. They lagged, and to your point, Carl, the rally broadened out. It was more inclusive of things like small caps and like cyclicals. Financials, I think we have to pause on. We've had just a banner few weeks and month, especially since the election, on the view that there will not be as tough regulation, there will be more M&A and capital markets activity. All of that goes well, and higher for longer too. That's been a theme, that the Fed won't be able to cut as much in the new year, ultimately better for bank profitability.
Let's bring in Ed Yardeni this morning, talking more about the markets. Of course, Yardeni Research President. Ed, happy Black Friday. Great to have you.
Thank you.
You've been writing a lot, obviously, lately about the coming year, and actually the next few years. I know we've talked a lot about your 7K target, your 10K target down the road. To Sarah's point about the market broadening, is that, I guess, healthy on a net basis?
Absolutely. You remember when this bull market got started, it was kind of like the Rodney Dangerfield bull markets. It got no respect because it was so narrow. And we argue that give it some time, it'll broaden, and that's what it's doing now. And we've certainly seen the mid caps go on fire, and then the S&P 493 I think are going to do well, increasingly well.
What do you think's going on with these yields? Are bond vigilantes convinced that there will be constructive work done in this administration?
Yeah, absolutely. I think the Trump administration, incoming administration, bought some time, kind of placated the bond vigilantes by basically acknowledging that we've got a problem with the deficit, and the new incoming Treasury Secretary is somebody who's got a lot of market experience, so he's kind of like one of us, if you will, when the market looks at this administration. And the fact that they're in fact going to go after spending, and that they're going to try to raise some revenues, maybe with an across-the-board tariffs, at least shows that they're cognizant of the problem, and maybe they're kind of having a Bill Clinton moment. Remember when Bill Clinton was warned by his advisors, don't mess with the bond vigilantes, And we actually had a very conservative fiscal policy back then.
Well, I mean, analogs to the mid-90s are pretty positive, and there has been some work done looking at what happens when you bring the budget deficit relative to GDP lower. It's an everything rally, is it not?
It becomes an everything rally, and the only risk is that it becomes too much of a good thing, that it becomes a melt-up. And we're kind of on the edge there, right? We've got the valuation multiples, which are quite elevated. We've got the forward PE around 22. We've got the Buffett ratio around 2.8, which is a record high. We've got Warren Buffett himself raising a lot of cash, which kind of has everybody somewhat concerned. But all in all, I think the bull market is still very much here and continues into the next year. And I don't see a recession. Recessions are usually caused by credit crunches, and that's not happening with the Fed inclined to lower interest rates. It's not happening with the price of oil unable to have a rally with geopolitical risks, which seem to be actually narrowing. So the only thing left to worry about, I think, is tariffs. And right now, it looks like they are being effectively used for negotiating purposes.
I mean, there's been so many flows into U.S. equities because of all these reasons we're talking about. EPFR reported 141 billion into U.S. equities,
Huge.
and that's for the month, the heaviest inflows in a 4-week period on record. So, do you want to just continue that trend, or do you want to go somewhere contrarian like Europe, where everybody hates right now?
Well, you're asking the wrong person. I've been recommending stay home versus go global since 2010. I've been recommending overweighting the U.S. and it's been on fire recently. But you're right, from a contrarian perspective, maybe it's worthwhile looking overseas a little bit. But no, I'm going to recommend continuing to stay home and invest. By the way, I don't like what you just said, because that's talk about contrary indicators. When foreigners really discover the U.S., that can be a contrary indicator. But that doesn't necessarily mean you want to go overseas. So, look, I'm not ruling out the possibility that we'll have some sort of pullback. I think it's Mike Santoli's favorite phrase. I like it better than corrections and bear markets. So we could have a pullback, obviously, maybe in the new year. But right now, we're still got a Santa Claus rally, in my opinion.
Well, he was here on Wednesday, and he's going to be around. So
doesn't he come back today for Kids Day? We have Kids Day at the
I think so.
Ed, appreciate it very much. Talk soon. Thanks. Ed, your
Thank
day.
you.
Bargain hunters heading to malls across the country looking to get an early jump on Black Friday deals. Let's get more from Courtney Reagan at Westfield Garden State Plaza in Paramus, New Jersey this morning. Courtney, how does it look?
Hi, good morning, Sarah. Actually, traffic is picking up here. The longest line that I saw ahead of the mall opening was at Lululemon here at the Garden State Plaza. It's expected to be the biggest in-store shopping day of the year here and around the country, but a number of consumers already got a head start online on Turkey Day. So fresh sales data from Adobe Analytics show us that consumers spent a record $6.1 billion online on Thanksgiving Day, up almost 9% year over year. That was about in line with what was expected. Toys were among the best discounts on Thanksgiving, peaking at around 27% off listed price. Electronics shortly behind that at 26.5% off, followed by apparel at 23% off, and then appliances. Interestingly, those buy now, pay later trends are still driving higher, driving $430 million in online Thanksgiving Day spend. That's up more than 10% over last Thanksgiving Day. Now, Adobe Analytics does project that 71% of shoppers plan to shop online today, spending about $11 billion. That'd be up about 10% year over year. That will be the biggest expected growth rate for any of these big Cyber 5 days compared to last year. But nearly 132 million consumers, or 72% of all Americans, will shop in some way on Black Friday today, according to the National Retail Federation. And 65% of them, almost 2/3, say they're going to shop specifically in stores today. Well, Retail Next, of course, they count traffic, and they're forecasting slight traffic growth for stores on Black Friday versus last year. Even though overall foot traffic is down about 3% so far this year, retail conversion rate, though, interestingly, or the ratio of purchases made from browsing, will likely be lower on or around Black Friday than it will be in the days and weeks leading up to Christmas, when frankly time is running out and you can't afford to browse. You have to just press that buy button. For many Americans, those stores remain supreme. 53% tell Deloitte they're shopping in store because they want to take advantage of doorbuster deals. 48% say the in-store deals are just the best on Black Friday, and 45% enjoy the tradition of shopping with family and friends. Weather is always sort of an X factor on a day like Black Friday, but really across most of the country, very little chance of precipitation except for the Great Lakes area. So retailers have fewer excuses, at least when it comes to weather, when it comes for any hiccups that we might end up seeing in store. So you have no excuse. Hit the stores, going out. The deals are good.
I love the weather report included, and a lot of them have been blaming weather, the warmer weather, for lack of selling cold, high margin apparel. I'm curious about promotions and what you're seeing. It feels like they're high and early for this time of year, at least from my email inbox. What does that say? Do you agree with that? And what does it say about demand and what we can expect for profits?
Yeah, I do. I think the deals are actually pretty good. I believe I saw the average online discount yesterday in the United States was around 27% or so. We mentioned toys saw the biggest discount yesterday when it comes to the product categories, but I think 30–40% off on many categories is what you're going to see. TVs most likely to be the best discounts today. And I think interestingly, if you read between the lines of those Adobe sales numbers, Sarah, and you go at the very end, they say they've seen 26 straight months of declining prices year over year online. Prices actually down about 3% in October this year compared to last year. So I know we talk a lot about inflation, but when you're talking about these key shopping categories, a lot of prices actually are lower, so that makes the discounts feel even better.
I mean, they should say, come in before the tariffs hit. Right? They should advertise that.
Well, Target's on the take now with Cyber Monday savings. They say up to 50% on thousands of items. I thought for sure you were going to go to the Taylor Swift Eras book.
They have this exclusive Eras book. I don't know, Courtney. I think it's very bullish, but although Target's had a hard time lately, I wonder whether this Taylor Swift collaboration can turn around. They have the book. They also have the vinyl album from the Tortured Poets department.
Yeah.
I think they're the only ones.
Yeah, they actually get a lot of those. They get a lot of those Taylor Swift exclusive, it seems, every time she puts them out. That's her go-to retailer.
Courtney, we'll talk all day. Appreciate it. Courtney Reagan helping us navigate Black Friday today. When we come back, Microsoft facing a wide-ranging FTC antitrust probe. We'll take a look at the pre-market here. Pretty steady gains as we do have this shortened session and close out the month of November. Stay with us.
Educator.com.
Keeping an eye on shares of Microsoft this morning. At this point, those shares do not appear to be giving up much of anything, despite the news in the last couple of days that the FTC is conducting a fairly broad investigation on antitrust grounds of the giant company. I'm told that's been the probe, so to speak, has been ongoing for the last 6 months. It does include civil investigative demands as well of the company. Broadly speaking, looking at the cloud business, AI, cybersecurity, and perhaps even more importantly, the bundling of any number of products, office productivity, security software with their cloud offerings, with their Azure cloud offerings. Of course, antitrust scrutiny is nothing new from Microsoft, although you have to go back over a quarter century at this point when the Department of Justice and Microsoft tussled for years. Then it was having to do with the Netscape browser and the like. But the key question here, guys, is does this continue under the incoming Trump administration? We've discussed many times the market will be focused in part on who takes the job at the FTC from Lina Khan and who takes the job from Jonathan Kanter at the Department of Justice overseeing mergers as well. We don't have the answers on that as yet, Sarah, but it will be important because there is an expectation that you're going to have a much freer hand in corporate America to do deals, but I think we have to wait and see. And then for probes like this one, it also becomes important. Is it possible it would be continued under an incoming Trump administration? I assume it is, but it would seem less likely.
But then we have to separate antitrust in terms of deals, mergers, and
Correct.
this sort of thing,
Correct.
which is more scrutiny into anti-competitive behavior around big tech, which we have seen some, the Trump 1.0
Yes.
administration go after. They were the ones that launched these probes into, right, Meta?
They launched the original Google monopoly, which has already now been found in favor of the government. Now they're dealing with what exactly the remedy will be there. So that was the big one that was launched under the previous Trump administration.
So maybe higher likelihood of something like this than, say, the deals, although analysts aren't convinced this morning. I mean, no surprise, Dan Ives, who likes Microsoft, says he still rates it a buy, and he thinks this is more bark than bite, and it's a Lina Khan parting gift for big tech, and it'll probably go away.
And that very well may be the case. And by the way, as we point out any number of times with these probes, not to mention when they actually do bring legal action, this goes on, Carl, for years and years. We're still dealing with the outcome, for example, of Google, and that won't be determined for many years, despite it obviously being begun, as I said, under the previous Trump administration back in, I think it was 19.
Not to mention, it's kind of hard to argue that any of this uncertainty about regulation over the last 4 years has done anything to impair CapEx plans, or certainly tech spending plans among these hyperscalers.
No, I mean, that is a separate issue to a certain extent in terms of their willingness to expend numbers, the likes of which we've never seen. Obviously, the return on investment on all of this so-called AI spending is going to be under some scrutiny as we move into 2025, but you're right. That said, we have seen a depressed level of mergers and acquisitions, no doubt. And a good amount of that is a result of the scrutiny of the FTC led by Lina Khan. That's going to change in terms of leadership. We just don't yet know what the true impact will be from a new leader.
And Google has lagged over the last month or so on all these headlines as well as they try to come up with remedies for the government. When we come back, Apple and Amazon hoping for a magnificent run to end 2024. We're going to look at what to expect from both tech giants this holiday season. Take another look at futures as we take you into the opening bell, looking to end the week and the month on a high note. Dow futures up 80, S&P futures up 11, already up 5% for the month of November, tracking for our best month since February. More Squawk on the Street when we come right back on this Black Friday.
Take a look at some NDX leaders pre-market. Got a little activity in manufacturers of semiconductor equipment. Lam Research actually got a price target increase on AMAT out of Bernstein. They go from 210 to 220. Of course, that comes as software has stolen some of Semi's thunder in the last few weeks. Opening bell coming up in just about 4.5 minutes. And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
My keys. Okay. Good morning, retail traders. Happy Black Friday. CYCN. CYCN is at the 200 on the 1 hour. Why are trading higher by 9%.
WTI crude moving a bit higher this morning, trying to avoid a fourth negative month in 5 as some of these supply risks.
We got 1 minute here.
Meantime, Reuters says that OPEC and its allies postponed their Sunday production policy meeting, pushed it to December 5th. They are said to be discussing
It's at a breakout.
an output hike for Q1 25. Meanwhile, that ceasefire between Israel and Hezbollah appears to be holding for the most part. Gas prices,
For the most part.
near the lows of the year, which is important on Black Friday.
No, it's definitely a consumer tailwind, as we've seen. You know, the OPEC plus delay is interesting. They're only delaying it a few days here, but there is a report and there's chatter, at least. If you look at, for instance, there was a note from Commerce Bank analysts saying that they are going to delay that hike by at least 3 months. Again, that's just analyst speculation at this point. But they've delayed it.
Oh, shush.
Because of, what people think.
I don't want to hear that screaming. I'd put a stop to it if I owned the place. Get to work. Okay, we got a double bottom on the SPY. I got support right at 599.07 to stay bullish. Tesla at 237, 336. SMCI down a couple bucks. No, I don't want to listen to that squawk. I can't stand looking at her. She's cute, but it's not cute always that matters. Baidu down $1.19. Mara up 97. Zim is up. Target 132. I mean, the fat cats will buy Target because it's so cheap. Same as Boeing. I mean, them are the fat cats love Target. I had the IRS guy today told me that they're dropping their wokeness. They were told they had to hire people on color of their skin. Instead of the content of their character. So they're dropping that. Baidu's got a head and shoulders. I mean, this is like a long, if you were looking at it long. If you scalped it, I'd take it to the top of this channel here. $1, half a buck. I mean, 70 cents. We came back and hit the first support on the SPY. No, we didn't. No, we didn't. Yeah, no, we didn't. I think we still will. I'm gonna give it a little time. We're open a half a day today, right? Good morning, DEFX 10. Welcome. I'm Sootaloo. Hope everybody had a blessed Thanksgiving.
Going to prevent extreme, like catastrophic level tariffs, which most people are
The
interpreting.
video's up
inflation.
at
I know this is a
$1.45.
complicated question, because one could totally argue that tariffs are not inflationary. So there's a separate total argument about that. But
PLTR up 65.
Down because people, since that Besant pick, was that really that?
Zim dropping.
So I think my gut feeling initially
Donald
was
is
similar
up
to yours,
15.
but I do think that there's some credence to this idea that maybe it cut off the fat tail risk, Oliver, to what may have happened in terms of those fears festering. Not even that they would happen, but that the market, sometimes starts to price things in. And I look at the dollar as sort of a snowball rolling down the hill when it starts getting moving. If anything, this this Besant trade blocked the movement for a second. It broke up that big snowballing kind of impact, and I think that was good because this type of a move in the greenback, this type of a move, sends ripples effects worldwide, and so maybe it wasn't going to necessarily come home to roost yet in risk assets here in the U.S. It was going to have its impact on foreign markets more so, and then we know how that can ultimately have its ripple effects as things kind of come back. So to answer your question, we had a conversation about this with another Scott Bauer on futures a couple times over the last week, and I think he resonated and agrees with you, but he also looked at the trade in yields as it was just overdone in both directions. It was overdone at 3.5 and it was overdone at 4.5. So some of this is normalization, and some of this is what I always describe, I think, as I agree with
SPY hit the 200
that this is that pendulum
on the double bottom.
back and forth, and we get overextended before we ultimately find a more reasonable level. So perhaps the bond market will run out of momentum to the upside here in terms of price or yields to the downside, but I don't necessarily think that the general trend of maybe this higher for longer or stabilization in the 10-year around 4% doesn't make sense. And in the case of the dollar, where I fall. I think the dollar has a lot of tailwinds, we'll put it that way.
Okay, well said, good analysis. Also, I'm glad that I dropped the red light from bonds on the risk radar earlier this week back to yellow, because I was thinking, like, in my gut, I had such a high conviction for higher yields when the Fed put in that 50 basis points cut, but then because of that, I was kind of thinking maybe yields are just going to snap back and keep going, but they have continued to drop. So, I mean, bonds are well bid again this morning, 4.2. So, some pretty high conviction. By the way, for the record, I know we have this conversation a lot, and we could do a separate one about it, but I still feel like yields down is not necessarily the best outcome. Like, I still think that if we're pricing all this pro-growth stuff in stocks, you want to get more growth. Alex, on that note, there is a comment this morning from the sell side.
Tesla broke out.
On the chip stocks. Take me through that, because if there's one.
Had a symmetrical flag right here.
I think we're describing all this as very positive, mostly, as we talked about this morning, more likely to go up than down.
SPY has to break the 200.
But
We had the double bottom,
and some of the
higher low.
Starting to flow in on some of the chips. Take me through it.
Yeah, this is interestingly timed because there was also a story that came out basically saying that, hey, some of these fears around a Biden administration crackdown on semiconductor sales to China might not be quite as severe as expected. But nonetheless, Bernstein lowered their price target on several of these different names, including Lam Research, including Applied Materials, and ASML. They have outperform ratings on 2 of the 3 with a market perform on LRCX, of course, Lam Research. They took down their 2025 wafer fab equipment estimate to $107 billion. It's down 1% year over year. And they're looking at this lower wafer fab equipment WFE cut. They're seeing this because they think that this China spending is going to be lower given the potential U.S. restrictions. They have a weaker outlook on NAND and logic as well, and so that's why they're cutting their forecast. But it's kind of interesting because we got also this story that it might not be as severe. So I think right now we're talking about uncertainty in the marketplace. I mean, there's a ton of uncertainty. We're watching the administrations kind of pass the baton from one to the other. Yet we still have all these kind of policy actions that are taking place from. I don't mean this in a disparaging way. Well, let's call it the lame duck administration, given the fact that they're
lame duck.
and that's still impacting how we're
Hey.
handicapping and looking and projecting out some of these stock prices. So
You don't know the
and
Democrats
the
very
job
well.
that Bernstein and their peers have in this industry right now.
They're spending money like they've never spent it before because they promised this money out and they know that they're not going to be in office. They're not a lame duck. I mean, usually in most cases they are, but no, not with this regime.
$5 price target for Lamb, a price target of 210 for Applied Materials, and 767 for ASML. Now, all these stocks
They got too many buddies out there that didn't get their money yet.
That story, that this idea of these restrictions being less severe than expected seems to be finding its way.
I'll argue with you on that, Alex.
Okay. So we know that restrictions are coming, and we know that it's going to hit certain ones more than others. We also know that this whole batch of suppliers, fabrication, equipment stuff have all been weak. It's just that it looks like the rest of the chips are kind of going that way. If we just look at SMA,
We're cutting you off, man.
Conversation, it's been bending a little off.
Taxpayers don't need to fund this crap.
So it does kind of look like the broad semis want to slip. But look, if everything else in the market works, if this other stuff we're talking about macro-wise does work, then you have an offsetting force to the chips. I'm just not sure you want chips to be going lower. Hey, any thoughts on Microsoft real quick, Alex? They're being told by the FTC. We know this, we're getting in, but again, to your point, whether it's chips, whether it's antitrust, there's so much tech, legal, regulatory oversight that I feel like it's all got to be priced in at this point.
Yeah, I mean, these companies are just so big. At some point, you got a target on your back. Some of this, though, I think is just the messiness of domestic politics, kind of handing over.
Oh, God, I'm tired of you already.
It's going to make, not to make it political, but, if all these things.
AMC made it to 5. IWM's up $1.40. We got an expansion pattern. We printed so much money for these billionaires and millionaires that they're going to they might bring the market down because they're going to be pumping like the tariff and the government agencies that are going to be cut because there's just too many people working for them at home doing nothing. There's a lot of waste that's going to be cut. And this deficit's going to be brought down. I think if we just cut the spending and not worry about tariffs, we'd make a killing. And let the millionaires spend their money. Instead of taxing them, let them spend it and invest it.
Available anytime, anywhere, on any device for free.
If I had 1,100, I mean, me personally, if I wasn't it cost me $1,100 more a month to run my business. That's an employee I could hire part-time, but I can't because I got to pay extra high costs and crap.
Even manage it for you.
Not to mention Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
That's all because they're overspending.
A modern approach to wealth management.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He is Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Jimmy don't like the overspending.
Stocks are up on this post-Thanksgiving Friday. We've got crypto up to Bitcoin's running. MicroStrategy, we're all pushing back to highs. Matt Tuttle joins us, CEO and CIO at Tuttle Capital Management. He's on the phone with us, home of the MSTU Levered MicroStrategy Fund. I think about as busy as anyone when it comes to this subject lately. Good morning, Matt.
Good morning.
Thanks for being here, sir. Tell me what's going on with your levered fund. Is it wild over there?
Okay, we got IWM Snake, Head and Shoulders.
Yeah, I mean, people are buying the dip if MicroStrategy even dips. I mean, every once in a while it does, but it seems like every morning I wake up and it's up 10%.
Your MSTU is up 10% this morning. Take us through the case for levering up even more on what is probably the most impressive feat of financial leverage and
Meta,
engineering possibly in
SPX.
corporate history.
So yeah, this is a crazy name. I think that there've been a couple of
Okay.
things this year
We got
that are
an expansion
game changers
pattern.
for crypto. Number one are the spot Bitcoin
Randy?
ETFs, which allow
Are we going to correct here? SPX 1, 2, 3 expansion pattern, and today is the 29th, half a day, end of month. I bet you we pull back. The 6,000 put we do have 3 white soldiers out of the gate. $205. Oops. $205 and $210. Meta is at resistance. We got Apple at resistance. NVIDIA's at resistance. AMD's at resistance. Pot stocks are flat. China.
China.
PDD's under $100.
China.
China. Now I gotta get this thing to turn around. What a weave we tangle here. 180. Oh, that's my problem. We got 1, 2, 3 on Citibank. Bank of America's knife. 1, 2, 3 on it. Or 4. NVIDIA's breaking resistance. There's George. See if he can stay out of politics.
510 in the next 21 days, but ideally speaking, the expectations by placing this position is that the 510 will expire worthless, and ideally as close to 510 as you get towards expiration, the better. To which time the 410 January position will be unencumbered for profits. But keep in mind, in the next 21 days, if that December expires, you have to hit essentially break even, which is $471 on the underlying, which certainly can happen based upon the volatility of this name, and plus with the expectations of Bitcoin higher. And this is essentially a levered position on Bitcoin. It should, in theory, go higher as well.
It's a fun trade because there's obviously no shortage of appetite for those higher out of the money strikes. So this is an expensive stock to trade. Number one, out of the gate, you have to understand obviously because the volatility is so high, and it's also a $400 stock, and then with the volatility so extreme, the options are already going to get juicy. So it feels like you've got to find some way to sell something here to offset your costs. And so conveniently, there's folks out there ready to pay a decent amount for 5 to 10 strikes.
Definitely, and that's why I structured, again, the shorter time frame out of the money, because there's still a lot of demand for those. And you could certainly see the implied volatilities inflate, by the way, as we get close to expiration next week and the following week on the December contracts. But nonetheless, looking at the near the money purchase of the January contracts. They're expensive as well, but at the very least, we're using the December contract to help finance the purchase price of the January in the money or at the money contracts.
Got it. All right. I think it makes sense if you want to get long and you want to get a nice rip, but don't necessarily plan to like hold through for a fresh breakout. So, which seems reasonable because, you know, there is such a big candle at the MicroStrategy high, which got to 543, that might be a pretty tough a technical level to get over. So you can still play a good bit of
SPX broke out
in this trade. And you don't have to hit it perfectly. You don't have to get like a fresh massive breakout. So it makes
So
sense.
I'm
Thanks,
definitely
George.
down here.
Appreciate the eyes on the options. And thanks to Matt Tuttle as well for the thoughts on the MSTU Levered Fund as well. Coming up for an hour or two, we're going to check in on the Black Friday sale, see what you're buying, and then look at Amazon. Because I think that like every day on Amazon is kind of Black Friday, so.
Amazon.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free.
Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of
Tesla coming back
traders
to the
who live
VWAP.
and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Burned here on the call. Put. Damn, that 599 calls. I wonder if that bitch them things was shot up.
Welcome back to Morning Trade Live from the New York Stock Exchange.
Wow.
I'm Oliver Rennick. We're in hour two. Equities
205.
We got a nice little rally underway this morning. Nvidia's punching higher. Russell flipped, but that's okay. Trade-off is all right as long as the big ones are moving, which they are. Momentum is back this morning. So the whole conversation that we were having earlier about rotation got slowed down. It's been a major theme this past week, but today it's actually more of the tech stuff firming up. You got Bitcoin up to 99.5 for a 1.7% pop this morning, risk on, and I do think that this is just a better dynamic of gains for the indexes, a little bit more on the heavyweight side. I got no disrespect for the small caps, the rotation, or any of it. It's just math. And when you got tech up front, you're going to have safer rallies. That group is up 66 bips this morning. Materials up just 3 basis points, and that's your spectrum of sector gains. Everything is higher. Materials and banks are the smallest performing winners on the day. The financials have had a really good run, including for the regionals too. And by the way, speaking of banks, one that we're familiar with is Schwab, Charles Schwab Corporation. So if you haven't watched the Market Overtime yet with our incoming CEO, Rick Wurster, I talked to him last week at Impact. It's all live on Schwab Network and YouTube page on the Market Overtime. Go check it out. All right,
Sucker's really fired up today.
Mr. Kevin Hanks. We're looking at some reports.
The SPX is.
From Bloomberg this morning. It says it's a little sleepy here in New York, Kev. I believe it. I took the train in and it wasn't busy.
Well, they're expecting about 180 million people to be out shopping today, Oliver. And one of the biggest problems, and you saw it yesterday in the Macy's Thanksgiving parade, is weather, right? I mean, weather, we've had a fairly, especially in the Midwest, as you know, we've had a pretty mild fall, but the temperatures are dropping here in the last couple of days, so weather might be a part. And so who does that favor? Well, it might favor Amazon, it might favor the online e-commerce shoppers. It might hurt brick and mortar shoppers like Walmart's and Macy's. And so how is that going to play out over the next couple of days? I still think I believe if you can check me on this, 5
Hey, how you doing?
days between
Oh, I'm down on
Thanksgiving
one.
and Christmas than there were last.
Huh?
How's the Thanksgiving?
Pretty good. Pretty good. I went to my sister's and mom's.
Nice.
Didn't eat much. It's weird how my attitude about food has changed. I mean, I took small portions. Everybody else filled up their plate, you know, and I went back for seconds and thirds, and I sat there and ate probably an eighth of what they ate. Okay, I'm trying to build my confidence on this put here on the I'm in the SPX. If that's smart. Down a couple hundred.
I saw you got in on the 6,000 foot, so I bought it too.
Oh, you should.
So we'll see how it plays. Let's see how it plays out.
It's not looking good. I only got 2 of them. But I'm going to buy a bunch more maybe.
I just feel like maybe the FedEx charts have
10, but I'm support's going to be once we hit that 6,019 area, and that's where we got to figure out if it's going to break down from there. No, it ain't gonna work.
Tim, you're hanging on to him still?
I'm trying to figure it out. Giddy up, they say. Water ahead of us. Tread water ahead. Tread water. Damn them calls on them. I just left $100. I had a swing on the SPY, and I just left $110 on the table of contract. I was up 400, so I got out. They're at now 260. I sold them at 140. I about bought the added on right there on that candle. Think about adding on right here at 80 cents. Give me 12. We're going to know here any second if we're going to get out or not.
Item, or is there somewhere in the stock run up? I mean, and we can kind of broaden this out to the S&P as well. I mean, we are in rarefied territory valuation wise.
Yeah, we are. And you know, the market, when you look at it when the S&P 500, it's obviously a composite of some companies that are at great multiples, some are lower multiples, all different growth characteristics. So, you know, the PE ratio and the market has been driven by these fabulous 7 companies. And some of them, like NVIDIA, are trading at 60 times earnings. So that pulls up the whole market. We just happen to think that a company like Amazon, and for many of the companies in the market, they're reasonably priced for their expectations. They, you know, as your prior guest, I think, mentioned, you know, 2022 was a terrible year. And we had a recovery year in 23, and we've had a recovery year in 24. But companies like Amazon's only up 10% last 3 years. That's not exploit. So
what?
We're looking at it, and we think
it split you, dummy.
Possibilities for their growth. Market's going to bounce around a little bit. I've heard 5 less selling days.
I'm done with him. He said Amazon. I thought he said NVIDIA. Well, they had split too, but Amazon up 120, 130% from the bottom of 2022. Yeah, this thing just keeps going. It's crazy. Just seems signs of weakness, but I got a headache. My neck hurts. I tried a new apron on today and it screwed up my neck. I've had it broke and fractured, so I just don't like it when it feels like this. I'm gonna go take an aspirin. I don't want to, but I think I need to. So I'm still in these. It's probably good to cut myself out of them, but 2 down, 260. I think I'm going to add right here. I should have added back there 75 cents. I'm going to step away for a second, come right back. I'm still going to use this here as a support down here, but raise it up to 60.2255. That's got to hold. Right back. Got a major headache because of my neck. There. So I got 10 more at 70 cents. We hit the 21. I've got to drop more here though. Ugh. About ready to take my loss. Did you get out of your trade yet, Alex? I'm still in it. I got 10 at 70, but I don't know if it's a good. I don't know if that's a good. We close early today, don't we? Half a day.
Yeah, no, half a day. I believe the market's closed today at like 1 p.m.
Yep. Eastern.
Yeah, Eastern. I'm in Jacksonville right now. I'm visiting family, so.
Oh, tell them I said hi.
No, okay, I got you. I had a few of them follow you, Jim, so we gotta treat them right.
Uh-oh. No, not on a good start, am I?
I don't think they're on today.
They're not on today? Good.
I don't think so. Let me see.
I don't want them.
Well, they joined. Let me see. Oh shit.
They say that guy ain't worth a shit.
I'll tell you if they're on the chat. I got you.
If this gets to 90 cents, I'm even.
You said if it gets to 90 cents, you're out?
Yeah, I'll be even then.
Wow, you must have bought
I
a
got
lot then.
12 contracts. Only had 2.
You bought 10 at 70 cents?
Yep. So I don't have much in it, but $1,100. And this can drop down and hit the 63, or it could drop down a little bit lower too.
My Discord is being weird.
Well, the toss is acting weird.
There it is, 90 cents. Ask.
The 6,000 strike is 80.
Hold on.
Is that your mom? Did you add on any? You're probably down more than me.
And there's probably screaming in the background. My bad. I'm with family right now.
It's all right. As long as they speak English. Okay, there's one knife. We're at.
Are you jumping out on 90?
I don't think so. I'm gonna wait. I think we can hit 60.18. 50%. Let me put a fibby on this. Yeah, that was definitely one support, your first support right there. Okay, I'm gonna go get my hot water warm. I'll be right back again.
So, look, if the recent dynamics are any guide, I think the pawn race and that handoff from the Darlings, that's really the Magnificent Seven to the 493 is going smoother than many expected.
That's true. All right, fair enough. Going pretty smooth. When you talk to clients, then, like, what is the small cap, what is the mid cap allocation? What should it be like? If this is a good thing, then should we be skewing our portfolios hard? Should we be calling up our advisors saying, hey, give me more of the small stuff?
Absolutely. So we talked about intra-group dynamics within semiconductors. Even within the large cap space, when you look at the equal weighted S&P 500, take a look at Invesco's RSP. That's something that I own personally. It has broken out to new highs. So coming down the size curve there, as well as small and mid caps. The Russell 2000 has followed suit, and I think that's just another symptom or byproduct of this broader catch-up trade and changing leadership that we're talking about here.
Equal weight's looking pretty good. What are sort of the options that you put on the table if a client says, all right, diversify me away from big cap? What's the ranking of products to fill in that gap? If I think about like value funds, if I think about the equal weight, think about just small caps. We heard earlier the case for international as being part of that value trade. Are these all options? Care to rank them or talk about size if we want to bail out some of our heavy mega cap indexed funds, Tal?
Yeah, so Ollie, we're seeing a lot of pushback and questions about froth and richness and value at the index level when talking about the cap weighted S&P 500, and you really don't have to look too far to get some better relative value, and we've talked about it all. So it could be equal weight, immediately improves the valuation profile, or the small and mid caps, which had lagged for so long, immediately improved valuations. Now, if you're hesitant about the strength of the dollar here and some of the rhetoric against international, again, there's domestic ways to make that play if you're a little bit cautious there. One deeply out of favor sector right here at home that I would use as a mechanism for that would be the S&P materials sector. And all you need is for the Fed to keep lowering rates, even if they take the escalator, not the elevator down, and for the dollar to keep softening. And we've had some good news on that score recently.
Yeah, very true. Okay, tell me about what you're looking for in terms of the overall trajectory then for earnings in these kind of more value plays. You got another chart, looks at margin expansion, sales growth. Seems like arguably a bottom kind of coming out of that sort of, we didn't actually have a recession, but we did kind of have, we had a manufacturing recession. We had sort of an effective non-AI deep slump in activity. Is that what's showing up here on this chart for the S&P 500?
Yeah, I mean, it's a great one to frame the debate, Oliver. Look, I think it's too soon to have another recession. We just had one in 2020. And from an earnings perspective,
finally someone said we had one.
A double dip. So I think we're coming off the lows here.
Nobody had said we had a recession back during COVID, and I kept saying it, and finally I hear someone says we had one.
That margin chart right there.
We had one because the government, shut me completely down almost.
Changes in earnings, and I like that from 493 here.
Huh? What's that?
I said we gotta figure something out with these 6,000s.
Yep. We're at 55. But we got a double top right now, so if it doesn't break. Lower low. And I'm down about 350. 480. All right, that's better. Double top, a little bit lower high, but not much. So I think we're going to know something here in a minute or two. I should have probably got something in my stomach before I took them pills. Yeah, these are going to expire pretty soon and be worthless if it doesn't turn around right now.
Jim, what we do, we dump these things?
I'm thinking so. Just
I
give
don't
it.
wanna see him go any- I don't want to see him go any lower.
What's going on with my computer? Yeah, I'm gonna have to get out. I don't want to take much more of a loss. I just know they're gonna drop though. Shit.
On the stock. This is analyst Kingsley Crane at Canaccord. They talked about the company's results showcasing resilience, what could have been a lagged setback in bookings activity.
There's the first
from the July
hammer.
They believe
First
that
red.
CrowdStrike's ability to navigate
First sign
through
in a
this
way.
period speaks to its mission.
I did a video on this
nature and
hammer this
effective
weekend, I
management
think.
Execution during times of crisis. So again, that's their thought on this.
Shooting
I know
star.
that, our own Kevin Hanks has talked about how this just pointed out how strong and well needed that CrowdStrike was, and how it's in all these different things. What I would say, Oliver, is it's not the easiest thing to switch from. They have like an embedded relationship with some of these really, really big companies. It was a self-inflicted mistake. It wasn't that they got hacked. So it wasn't like a breakdown in their technology for what it's trying to do. I think in the end it was just a situation where perhaps the market sold.
Had a bunch of shooting star. It should reverse
and then,
here.
as some of those questions started to be answers, cooler heads, those who were willing to take some risk stepped in, and the stocks recovered. But at where it is now, it wasn't without some loss. So to your point, maybe a pullback was warranted.
It's more like a hammer.
It does see upside over the next year.
Do you think that we should describe in retrospect now as like the tech version of like a fat finger? Like, do you think that's what it was basically? It's like, trading desk makes a fat finger error, You know, it's a loss, and they move on. You know, it's like it kind of feels almost like that in a way.
I think that's a really, 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 really good comparison, Oliver, because that's essentially what it was, except they should have probably known better. There should have been probably fail-safes in place for it. That being said, again, it wasn't a breakdown in the technology to the point where, you know, some sort of hacker went through and was able to breach and get out a bunch of data, which some of their peers have had. And so we've seen their peers recover from those. I mean, this is a far, you know, probably more widespread issue as to what happened, but it was something that was extremely avoidable, so you don't really have, like, is this going to happen again type of risk.
Right, exactly. All right. Chartmaster, Rick, is this a rejection of the old highs, or did we not get close enough to count that, or what do you see?
Well, that's a good question. I don't think we really came close enough to even call it a true attempt at getting to those old highs. And I'll explain what I mean. You know, I think you can find something interesting in pretty much every chart. You don't have to look hard at all to find it because there's so many unusual things about this chart. Just going back, over here before the problems even started, we had this very unusual island type reversal here where we had a gap up, a bit of consolidation, then another gap down, and that was the you know, the start of our 50% or so decline. Bottomed out here around August 5th, a significant low for so many stocks, then formed a very rather consistent channel here to the upside between our two white dashed lines here. And we also highlighted some important areas on our chart here. This was a area of repeated lows and repeated closes here. That's about where we topped out during our recent rally here. Now you can kind of form this downward sloping blue trend line here. A couple other notable areas, low points here.
You're gonna do what?
Are you gonna start unloading them a little bit?
Yeah. I'm gonna just give it a few seconds here. We've consolidated for 6 minutes and we couldn't break resistance. We got this bearish candle. But, you know, the closer we get to 1 o'clock Eastern time, the more they'll start depreciating.
Jim, I'm gonna give you a.
Huh?
I'll give you a test if I make money off of these.
Shit. Yeah, it'll be a tough one. Yeah, because I don't think it's going to work.
Chart looking pretty solid. In tech, but very different, Alex.
Maybe if I made a cup of coffee, things would change here.
Arguably even more exciting the last week has been HPQ, which is really not one that often is part of the conversation for our main tech names just because it's more sluggish. It's got all the PC drag. And is that basically why they sold off on earnings?
It's definitely one of the reasons why HSBC downgraded the stock after earnings. So to your point, it could be the case. This is a stock that, just like you said, doesn't move a lot, and so incremental disappointment can be enough to send it off its current move. When you're looking at HSBC here, Oliver, the downgrade from buy to hold, adjusting the price target to 38 from 39. So you really don't see a dramatic change in the price target. But the stock, of course, downgraded, so sounds a little bit more severe. The reasoning behind it is
Come on, profit takers.
Provided weaker than expected guidance for the first quarter of the
Had me scared there for a second. I'm still scared, but I mean,
significant commodity cost pressures within the PC segment.
we have to break all this tension right here and ends up free fall.
Its operating margin. They talked about these cost pressures.
Did you get your average down good?
The company's performance throughout the first half of their fiscal year 2025. But despite this, HSBC acknowledged the presence of a strong secular driver within the PC industry.
Very good.
So it's one of those situations where if you do get this PC refresh that many
So
are
you'll
calling
kiss me if
for,
you make
HPQ
profit on
will
this.
benefit from that, and so that's why they still have a reasonably,
On the lips?
I would say positive price target for the stock, considering it's at 38 and the stock's sub 35 right now. We're not talking
That's
about
worth
a
it.
super high beta stock here, but they did.
I'll be right
downgrade
back.
the
We got to
hold
do
because
something
there are
real
those
fast
other
though,
factors
because
that kind of limit that upside.
Okay. Pretty big drop, especially considering it's really only traded in like a $5 range for the last 6 months. So a quick shift to the other side of the range. Rick, did I get that right? Is that kind of what's happening here?
Yeah, pretty much. That's a really good headline there. And kind of to show what's happened here, this chart's a really good example of why we keep track of these areas where we repeatedly stop and reach high points or low points. So you can see our gray line, 31. That was the start of our big breakout. And more key levels to watch here, kind of circling the notable highs and lows. You can see our high, our gray line all the way up here, lined up pretty closely with the second attempt. Notice as well that even though we did make a higher close and higher intraday highs, the next day's
I mean, it's hard
Rami, a small red candle completely contained within a
when you're sitting in this chair and we're down.
Was a difficult situation here. However, today we're kind of recovering back above our purple trend line and our green.
What we're doing is
Notice that just the trend.
we're in the hope stage. That's we're hoping, and I don't like to be in that position. I'll be right back. Like I said, I'm going to get some coffee stock market.
I'm paying attention.
Or chocolate. $55. That's a little better. $35 down, $350 now, $360. We got one more trend line to go, the 50 SMA right now. We break that down. Then we're off to the races. I almost grabbed another 10 contracts, but I didn't do it at 40. That had just been $400. Well, I might get my chance. Put this over here so I can see it. I'm going to get out. Do, re, mi, fa, sol, la, ti, do. The next support's like at the 63 at 6,022.95 if we can drop below this 50 SMA. And what's NVIDIA doing? Tesla. Maybe a fake sell. That's right. Maybe I get lucky.
What do you say, Jim?
I'm going to put in a fake sell. You know what that is?
You know, put in a fake sell?
Yeah. I tell the Wall Street that I'm going to sell it, and then they turn around and sell it. But I don't sell it. I'm faking them out. That's happened a lot where I've said that, and boom, she drops. Damn it. Yeah, they're not wanting to give it up yet. They're going to have to. Well, if I get a loss on this, I know my next trade will be greener than heck. That's about the way it works out. Hey boys, you froze on me.
Yeah, I think the moderating macro triggers that don't seem to be threatening the market anymore. Remember, we talked about this a lot, Oliver. The market gets uncomfortable when things like the dollar and yields surge. And then if they moderate or just stay there, the market gets less uncomfortable. And I think that's what you're seeing right now. You've got 8 sectors of the S&P higher, 3 pretty close to unchanged. They're not willing to sell really any major sectors of this market right now, Oliver. And like I said, with a macro landscape that seems to be softening into the end of the year, boy, this shows all the signs of setting up for a pretty strong December, Oliver. But we have data coming up on the, next week we get into JOLTS, ADP, jobless claims, and payrolls, and we get PMI, ISM, manufacturing and services. So there's not, there's still things to look at on the horizon, but right now, things look pretty solid here, Oliver.
The sectors that are down now, staples and utilities, much more traditionally defensive in nature. It stands out to me today that tech is up because we start off the show talking about cuts, semiconductor price targets from Bernstein, chart from Tally Leger that suggests semiconductor sales will roll over. It's been a little bit of a weaker part of the market, but if it kicks in on the days when the other stuff doesn't, then it doesn't matter which one we get if we're just rotating every day. One tech, one day it's tech, next day
Tesla's at the VWAP.
We're fine playing that back and forth.
Well, yeah, that seems to be the narrative and the theme. If you look at the Dow and the Russell, they basically reclaimed the highs, hit some new highs this week. S&P, of course, and the NASDAQ has actually lagged. So I think we're just seeing some positional rotation based on, generating alpha from again, since large institution positional switching, if you will. But nonetheless, I think the 10-year, if you look at it, we're now right around the 4.2% area. So it looks like we're breaking below maybe the 4.25 area, and overall that might be very positive for the equity space. I think the Fed also will be cutting this month and maybe pausing, but nonetheless, the dollar seems to be breaking down off their 8-week run, as well as yields. So for what it's worth, it may be a declaration, at least by the bond market today, or at least this week, as well as the U.S. dollar, that maybe the inflation prints going forward will be relatively moderate, and that seems to be very bullish for equities.
Agreed. 66% chance of a cut in D's, Kev. You think that number's appropriate? 2/3?
Well, you know, the Fed has leaned one way, and they've softened their stance on the leaning one way. So as you know, some of the percentages are coming down. But that doesn't mean they're off the table, and I think the data next week will really drive that number, whatever it is, Oliver, into the 80s or into the 40s is where the next move's going to go in those percentages. I think next week really sets the table for that. If payrolls come in and don't, I use this term a lot, scare the children, I think Jerome Powell is certainly given not as much conviction as he has in the past, but still conviction to working rates lower. And, you know, we'll see how that plays out based on the data next week.
Fair enough. I think I agree. Kevin Hayes, George Tillis. Thank you, gentlemen. Nice close here. Appreciate those macro thoughts. Fed looking at 66% chance for that December cut. Bonds, dollar, a little change. Stocks up. Tech out in front. Thanks for tuning in to Morning Trade Live. Have a great weekend, a long weekend. Do some shopping, get that economy going, justify those all-time highs. It looks like S&Ps want to go for them right now. We'll see if we get it in the last trading day of November. Appreciate you being with me. Nicole Petalides to my left, getting ready for Trading 360 next. Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between
Okay, now we got a
is
triple
easy.
top.
Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
What?
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He is Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Go Tesla.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up?
Oh,
correctly?
shush.
It's controversial. The old guard is saying.
Have you set yourself up?
AI feels controversial and it's going crazy right now.
It is going crazy.
A World War
So
III.
what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Bum, 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 bum. We're at third resistance. That's it. Damn it. Good way to start my post-Thanksgiving.
Good Friday morning. We are 90 minutes into the trading day. Welcome to Trading 360. I hope you had a very happy Thanksgiving. We have a shortened trading day today here live at the New York Stock Exchange. It's Kids Day, so you'll see a lot of action. We were dark yesterday for the holiday, and welcome. Welcome to the show, end of the week, end of the month. I'm Nicole Petalides, and I'm glad you're with us. We've had an incredible month of November, and we'll go through that. In the meantime, big show for you, our 360 Spotlight. We'll focus on Bitcoin, low 100,000 digital asset around these all-time highs. Pretty incredible for folks, and a lot of really projections for going much higher in the new year.
Yeah, we are.
Today, Lam Research, following reports that the United States considering less restrictive China regulations than previously expected, and that's helping the group. Our 360 round will dive into the grocery space, so we continue to battle some inflationary pressures. What will folks do, right? We have Thanksgiving now for the holidays, traffic in the stores. In the meantime, here's a look at the markets. Right now, you are seeing that the Dow Jones Industrial Average is up 203 points here at 44,925, up 0.5%. The S&P's up now 32 points, up 0.5% at 6,031. The Nasdaq up 0.75% at 20,908. And the Russell, this has been a real star performer for the month, up right now at 2441, gaining more than 0.5%. Winning week, of course, and a winning month. So the dollar pulls back 105.95. The gold right now 26.85. There's the trade there. Troy ounce up $20. Oil 69.45 the barrel, and Bitcoin just shy of the 100,000. But even there it is, just for you. Feast your eyes on that. Up 2%. Let's get some insights in the news shaping the markets. For that, we welcome in Michael Kahn, Senior Vice President of Lowry Research. Thank you for being with us. So how are you feeling about the market? I mean, we have a shortened trading day, pretty busy here, but obviously we expect some lighter volume. Some of your thoughts on the action?
You know, it's last couple of weeks after the election, got a little bump, and then things started to fade, which was just a little worrisome considering that we've been bullish. But last week, things started to change. And we look at market breadth more than the price of the index itself. And what we saw was that new highs were coming out in various segmented versions of market breadth. And that just kept us in the game. And since then, we've had new highs across the board practically in the indexes. And that's been supported by new highs in all of our breadth indicators. So right now, we're pretty positive on the market.
Do you expect more highs? So since you're positive, I mean, we're seeing that this is obviously the best year for stocks for the Dow since 2019, for the S&P since 2021. It really is notable. It's been a great run. Are you expecting more highs even through the end of this year?
Well, that's the thing. Even though we've had quite a good run, nice gains for the year, you can't argue with the indicators in that, we've got this rising tide, all boats type of thing, and the tide is rising, and we're just going to stick with it.
Yeah, understood. So how do you go about an investment strategy?
Yeah.
Near term and long term?
Well, in near term, we're not really set up to argue about the near term, but we've had our clients pretty much staying the course and just staying with what they've been doing. We've been finding some areas that are shining, like financials, and others that may be coming back a bit, maybe interest rate sensitives, but overall, we think the trend in the market's up, and just if you have a longer-term investment horizon, just stick with it.
Yeah, what seems to be working for a longer term strategy, do you think? Because you said that the market breadth is probably even better than it looks.
Well, the breadth is more than just the numbers of issues going up and down each day, the advanced decline line. We're looking at how far they're going up each day and what kind of volume is behind it. And all those things are pretty positive. We've had new highs in all of those indicators as well. So in terms of what do you do about it, you just find areas you're comfortable with. We like a couple of the areas, actually most areas, and we're sticking with it and just recommending to our clients that they just stay with it. I'm sorry, I said that a million times already. I apologize. But stick to their plan of buying a stock, staying in the market, and not really worry that the market may be high or may be overvalued, because the indicators behind it that are supporting it are very strong.
Among other.
This is the time of year where things get a little shaky with the holidays and changes in volume. You mentioned that the volume will likely be down today. Now we're going to see that probably throughout the month. So what do we do about it? We're not going to really worry about the news day to day. We're not built, again, to worry about that. We're looking at the internals of the market. Supply and demand is our thing. And the supply
and demand, huh?
You know, anyone who's taken an economics
demand
course
just to
knows
drop.
what that means. We think that prices are just going to stay higher, and until the evidence changes, and that's
50.
what we will be following.
And, you know, when it comes to tech stocks, we're seeing the NASDAQ continuing to do well. Semis today, we're going to have a conversation later about the group, but overall,
it's going to get weak.
Wowed Wall Street this year. Some of your thoughts about that trade, or even the Mag 7 that goes with it?
Well, right now, unlike maybe a year ago, the Mag 7 is not really what we see driving the market. They're participating for sure, but because of what's going on beneath the surface, and that's in the smaller stocks, small caps, mid caps, it'll affect all of tech that way. There's many more smaller tech stocks than large tech stocks. So I don't have a specific answer, but again, everything looks like it's percolating higher, and we're just going to stick with it.
Yeah. Do you think the Fed should make some moves or no?
Oh, you're out of our wheelhouse there on the Fed.
Okay, that's fine. You don't even have to talk about it. I mean, how do you think earnings are? It's totally fine. I mean, you know, if you're not watching the rates as closely, at 25 may not make a big difference to you, and that's the case for many people, especially if they're long-term investors. When it comes to earnings, for example, you know, you want these companies to do better, and you see their earnings growing year after year. You may have lower corporate tax rates next year for some of these companies. Do you think that may be sort of a catalyst, at least, or at least one of them?
Well, earnings are always a thing, and actually I can talk about the Fed and just a general fundamental environment in that we don't analyze it directly, but we do see the effect that it's having on areas of the market that are sensitive to it. And with regards to the Fed and interest rates in general, we see interest rate sensitive areas that are holding up pretty well. So you can take that for what you want to see what the Fed is actually going to do, but the market seems to be pretty happy with what it perceives to be going on. And the same would be for earnings. I don't have a good specific example for that. So again, and we're going to go back to our strength, which is supply and demand analysis, the market itself, and the market is telling us that it probably wants to go higher.
Yeah, what do you tell the folks that maybe have a lot of cash on the sidelines?
Put some of it to work.
That's it.
I don't want to go in there and say back up the truck, because it's really not that kind of environment with our type of indicators. I mean, we would see something like that at the end of a bear market. But for now, it's a continuation of the trend in place. And if you've got cash to invest, we would likely say put it to work.
Understood. I mean, the trend has been up. I mean, the S&P is up 8 of 9 days. We've had, you know, the S&P year to date up 26%, the NASDAQ 25%. An incredible run. But you're feeling more bullish, it sounds like, right, Michael?
Well, it is, you know, frightening to say, okay, what am I going to do with my money if the market's up double digits? Again, we listen to what the market is telling us, and we think it's in pretty good shape right now. So, yes, put it to work.
Good to speak with you. Michael Kahn, Lowry Research. Thank you so much. Appreciate it. Thanks for being here.
Thanks for having me.
Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will go through the technicals. Scott Bauer takes us through the trades for Reddit, Nano Nuclear, and Autodesk. We'll be right back. Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange.
SPY moving up still. Them SPY swings, God. $319 for them. Left on the table. Well, Alex, I guess I ain't gonna get that kiss. So all of a sudden they just start getting in it here.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts here to take us through the
Woo! F minus.
Trading Academy. Good to see you both. Hope you had a great, delicious, fun, family, blessed Thanksgiving. Scott, how are you feeling about the market as we're seeing at least new highs in Bitcoin and an incredible year?
I mean, there's a lot of optimism right now, and we'll see what happens once we get into early December, ahead of the Fed meeting. We'll see where rates are going. Right now, pretty comfortable with the 10 years sitting around 420, 422. Things are looking pretty good. I don't want to be overly optimistic, but things are looking pretty good. But as I always say, Nicole, with protection as cheap as it is right now, VIX down here. Just buy some protection.
Damn it.
I see. So trying to at least, like our last guest said, he's not backing up the truck, but he's feeling pretty good. I mean, we did see the S&P hit a high today. Exciting to see that. You do have a few names that you're watching closely, including...
He sure did hit a high.
So tell us about that, Scott.
I like the technicals on Reddit. After hitting those highs back around 158, 160 or so, it pulled down this week and held some really, really nice support around that 135, 136 area. That had been prior resistance. That now held as support. That's pretty bullish sign to me here. So it really looks like it wants to pop back. to those recent highs that we just saw around the 158, 160 area. So I'm just buying a simple call spread going out, December expiration, the 150, 160 call spread. Going to buy that for around $2.50 or so. And it looks to me like Reddit's going to push higher.
Yeah, I mean, it's had, after those earnings and that big gap up and that candle to the new high. Let's see what Rick Ducat has to say about the chart. Rick.
Yes, a chart with two very obvious and very distinct phases, you could say here, because first we had this rather longer-term kind of modestly sloping channel between our two purple lines here, mostly centered around our volume profile point of control. And you can see the vast majority of the trading happened around this area near like 59 or so. Then we had earnings. Big gap upward here, the start of a new trend. White trend line going upward here, marking some significant low points here. Our light green line, our post gap up low point, and then a high point, and then a subsequent low point after it was broken near about 123. To Scott's point, this is kind of the area where we were discussing that 135 area. It stood out to me too because I think that after we had our gap up, it looked to me like we formed kind of a bull flag type pattern here where we have a parallel, two parallel lines, kind of a downward channel of temporary consolidation / pullback after a big move to the upside. Now we're breaking out of that short-term downward sloping trend line. We've got our sights set up here near 158.49, the old highs there. But momentum not really behaving the way the bulls would want.
947.
Exactly. Out of the overbought area, kind of lower than we would be looking for the breakout potential. Look for a cross back above 70. And as we zoom in a little bit to look at support and resistance here, we can see that we've got our +2 standard deviation channel, the shaded area 150 to 160. That's kind of Scott's area of interest for his trade there. +3 standard deviation channel could be resistance near about 178.60. To the downside, we've got our green line, our old highs, our 21-day EMA, and our +1 channel all around near like 128.50 or so.
Wow, okay, thank you for that. A great chart there, Rick. And what's interesting is Reddit, they continue to expand, they continue to have user growth. They're eyeing more ad revenue in Brazil and also in India, obviously a huge growing spot there. Scott, final thoughts there?
Final thoughts are, I think it's a very inexpensive way to play the upside here. And as Rick said, that area that held there right around 135, I think is very, very significant.
Okay, up next, nano-nuclear energy. We didn't talk about
that's one trade I've missed, or DDT.
NNE, some of your thoughts.
Yeah, this one's a little bit riskier in my book, only because it's a stock that's in a sector that is in vogue right now.
Yes, ain't going to go anywhere.
However, the technicals look pretty good here for a pushback up to 37, 38 area. The company is developing a solid core battery reactor, a low pressure coolant reactor. They have a lot in the pipeline
NNE
on the nuclear side of things. And like you said,
never heard of that one.
That could also be the downside here. Is this is something we hadn't talked about for a long time, and like you said, now all we talk about is nuclear. But
that's because we're getting threatened.
From a standpoint here, upside looks pretty good. So I'm just buying a straight out call here, no spread. I'm just buying a call. I'm looking at the December 27th. So that's the last weekly of this year.
Oh God, what the heck
Very
is
straight
that?
Call, buying that around $2.75 or so.
Meta had a breakout.
Right.
Apple had a breakout.
Look, we've seen some of those nuclear stocks soaring, but to your point. So let's see, you have your trade there. Let's see what Rick Ducat says about the technicals, please, Rick.
Sure, I gotta admit, not a company I was super familiar with, but the chart
Me
is
neither.
quite interesting.
Never heard of it.
So we can see that we have here a situation where we hit our highs earlier in the year, 37.51. Then we had a bit of a pullback down here, and then our subsequent high didn't quite make it to the same level here. You can see that's where our darker red line is. So around 34 and 37.51, those are kind of the upside areas of interest, the extreme points for our chart here. So we did have our best close on the year recently, and that kind of gave us another area to watch. We came very close to that red line near 34 here, didn't quite cross it, and mostly the price action fitting within this white upward channel type shape. We've crossed above our volume profile point of control here near about 1950,
There's a
20
choppy
around
stock.
that area. Not really any clear volume nodes, you notice. Kind of just a very, very triangular shape here with all the concentration near the middle of the chart, right around 20 or so. RSI trending upwards still, backed off out of the overbought area. Our steeper green trend line has been broken, but still on the move to the upside. And kind of once again, like our last chart, similar behavior. We had a big spike to the upside, a bit of a pullback. Then it looked to me like we were forming kind of this bull pennant type pattern here after we broke out once again here. Maybe not the cleanest example of this, but you're looking for the general behavior, which is big gap upward, consolidation, then another breakout above the initial high point here. So that would be around 34. To zoom in a little bit and look at our areas of interest more closely here. You know, kind of right here, the resistance zone between about 34 to 37.50 that we already talked about. You know, Scott's trade had a strike price of 30. That's our blue line right there. So basically, when you factor in the debit pay, just looking for new highs once again here beyond that point. To the downside here, we've got our linear regression line, our orange 63-day EMA, our trend line, and our volume profile point of control. 1950 to 20 looks like a key support area.
Yeah, so the strike price there, you have the resistance up top. Final thoughts
Apple's
on this
happy.
name here, Scott?
Yes, this one especially because it's a little bit riskier, like I said, just because you know, it's in vogue. Make sure you have a pretty tight stop on this one, just on the option, especially because it's not a spread, it's just a pure outright buy of a call option. I would have a pretty tight stop on that one, maybe around 2.25 or so.
All right, so now we see Autodesk. The CEO has been focusing on cost cutting, had some pressure from Starboard, according to Bloomberg. You do have a couple of mixed targets here. For example, Piper Sandler has 311. I saw Citigroup with 361, 290 from HSBC, where it is today. Autodesk, where do you trade this here, Scott?
You know, I think maybe going into earnings, the expectations were just a bit too high. But you know what? When you break down earnings and guidance, Nicole, really, really good. They beat earnings. They raised guidance. I don't know what more you can ask for, you know, in a company here. And to see the stock pull back like it did, but then just spot on, hold at that 50-day moving average and put in a lot of volume at that 50-day moving average, to me, great entry point, great spot to get in. I'm just buying a simple call spread here, December 20th, 295, 305 call spread. Do that for around $3 or so. And that upper end of that call spread, that 305 range, would be filling the gap from where it came from prior to earnings. So I really like that upside play.
All right, let's go. Rick is on the charts. Here he goes. Let's see what he has to say here.
Yeah, really nice chart here. I mean, and the area of interest, I think, is about 270 when we look historically here, because it kind of represents where we topped out a couple times, had trouble closing above that area on earnings, even though we made some intraday highs beyond that point. Once again, more highs and consolidation. Then the eventual breakout had some legs. You can also see here, there's a volume node around that general high point, so it also shows this is another important area. Now we kind of have this another horizontal area before our next kind of stair step to the upside. We're back within this old range between our green and red lines, marking the low and high points of our kind of recent range that we saw here. So like 280 to 293, those are kind of the notable near-term areas. Kind of a curious channel type shape here, our two white trend lines here. You can also have done another parallel line across these highs that happen to match up pretty well. I was kind of curious if that's where we would top out. Didn't quite work out that way. Could be another area to watch. But even after this big gap down that took us below our resistance point, you know, still up significantly on the year. Moving averages for the most part still up and still above them. RSI is indeed interrupted though, below the 50 midline, green trend line broken, not exactly what you would want to see there. So when we were to zoom in for support and resistance here, we can see +2 channel. That's about where we topped out when we were heading into those highs, so that could be an area to watch going forward. But the +1 channel is closer here. 21-day EMA also lines up pretty well. And our shaded area, once again, those are the strike price range for the trade in question here. But really the range, that's the area to watch. And then ultimately to the downside, another key point would be around 270. So that would be the downside kind of breaking point, I might think.
All right. Thank you for all those charts today, Rick Ducat. And Scott Bauer, you get the last word.
You know, I am pretty optimistic here going forward, but again, the trader mindset is you buy when you can, not when you have to, so there's no reason not to have some downside protection. But you know what? All things are aligned pretty nicely for just a gradual rise into the end of the year. Obviously, the Fed interest rates, that can, throw a little bit of a wrench into it, Nicole, but I like where we're at right now.
Yeah, understood. All right. Good to see you both. Have a great weekend. Scott Bauer, Rick Ducat, thank you for being here for the Big Three today. Appreciate it. Coming up next, we'll spotlight Bitcoin, 100,000. Where is it going next? This was a post-election rally. Where does it go from here? The high was
Apple getting up there to the double top.
315 in the futures. So we have a conversation to have. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with the
Tesla came back and hit the
education crafted just for
200.
traders. Also, you can trade brilliantly.
Zuckerberg loves Trump.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Tedelides, live on the floor of the New York Stock Exchange. It's Kids Day. You see a lot of action here. Half day of trading. We'll close at 1 o'clock here Eastern time.
Yep.
But what has wowed Wall Street,
It's
certainly
over.
Bitcoin hitting new all-time highs. Perfect day to talk to Bruno Caratori, COO, co-founder at Hashtag. Good morning to you. How are you feeling today as you see Bitcoin above the 100,000?
Woo!
At the future? Some of your thoughts on what's going on.
That's a big deal.
Hi, Nicole. It's great to see you. Indeed, it is a good day. But as we look into Bitcoin and every other crypto assets, Nicole, we think that as we talk to clients all over the countries that we serve, it's important to know that what matters in the short term matters a lot more, a lot less. So Bitcoin will hit 100,000.
Take profit.
It may pull back a little, but we
Are you
urge
being
clients
funny?
to always keep the long-term focus in mind. And this is so important for Bitcoin.
So it's interesting because I do want to get to Ethereum, but Tom Lee from Fundstrat used to be at JP Morgan, had 150,000. He said it would likely hit that by the end of the year. There was another guest recently who was saying 200,000. People are up to 200,000, 250 going in for 2025. Do those seem crazy to you, or something that can happen because Bitcoin is a limited asset?
Nicole, they don't seem crazy. It is definitely possible. As we described the value proposition of Bitcoin, so think about it. Bitcoin gives us this fixed supply, non-sovereign asset that's fundamentally different from every other asset class out there that's poised to maybe create a new store of wealth. And think about the parallels that Bitcoin has, gold with its own market cap, or even things beyond gold, US treasuries. There's so many assets. These are multi-trillion-dollar asset classes. And if Bitcoin were to reach the market cap of gold alone with its supply that we know is quite certain, it would need to be at a price at over $1 million, Nicole. So thinking about $200,000.
Think about 34 million in 20 years.
Feasible.
Wow. Okay, so people who like to hear that. So would you say that there's not enough Bitcoin to meet the demand?
Nicole, I think the demand is still low right now. As much as people talk about Bitcoin,
it didn't make 100,000.
Most people don't own Bitcoin in any form. They don't own Bitcoin, physical.
She said it went over 100 grand.
They don't own ETFs. So the demand is still very low. We're still poised to see a lot more adoption of Bitcoin as an asset, as a store of value. And with this, this is going to be, of course, a big driving force in the price increase that we expect to see, maybe not in the coming weeks and months, but definitely in the coming years.
Well, I'm going to take my loss.
Yeah, and I think about institutions now. It became much more prevalent, as you noted.
Start all over again.
I would agree with you on that. I mean, it's an exciting concept for many, but they're not there yet, so there'll be more demand, I'm sure. When we think about now, you have the big houses buying it, you have the ETFs, and even Ethereum, too. I was reading this morning that Ethereum was sort of left behind a bit. I know it's like the smaller, younger sister or brother, but there's still possibilities there as well, right? And big possibilities?
Nicole, what we think often gets lost, especially since the election, is that it's been way more about not Bitcoin and even not Ethereum than otherwise. But you're right, since the election, Ethereum has gained in price for sure. The long tail of other digital assets has also gained. And think about, there's a specific cost to this. With the election, beyond just President Trump being elected, there's a new makeup of Congress.
Yeah, that's probably true.
That everyone knows will be a lot more welcoming towards crypto. And the truth is that
just hang on there, huh?
That are not Bitcoin or Ether, there has been this dark regulatory cloud hanging over them for many years, with entrepreneurs and projects being afraid of being sued. And everybody's read now is that this cloud is dissipating. This cloud is dissipating. Ethereum is actually a direct benefactor of this, because a lot of these protocols use Ethereum. So that's why we're seeing a lot of value being accrued to Ethereum now. But we think that other assets in the space of DeFi protocols, will also be gaining a lot of attention and a lot more opportunity for price increase in the near future.
So for investors, what do you recommend to them? Do you recommend to them to buy ETFs?
Well, at least I'd save $120, $110.
Or the cryptocurrency digital asset itself?
It could be 55 here in a second.
What's the best way to do this?
Good question, Nicole.
I'm going to go make some coffee.
Across over 10 countries. Our flagship product is actually an ETF of a broad market representation index.
I can't stand listening to you right now, my friend. You're giving me a headache. I got to listen to Elon's dad today, and I think I put it in the, if you haven't got to listen to him, I think he's in the bureaucrats. Let me see if I put it in there. I hope I did. Oh, there's Bobby. Bobby doesn't care about human trafficking. The majority of them aren't rapists, so it's okay. The 300 and some thousand criminals that have arrest records, but that's all right. Murderers and rapists. Ain't that right, Bobby? Yeah, I didn't put it in there, so I'm going to put it in there. Do. Back to 15. Knife. Bum bum ba bum bum ba bum. Okay, I think I can hear you now.
Well, I should say, but there are many others that stand to benefit from this.
Yeah, and I will leave you with a thought, and I'm sure you're on the same page because it sounds like you're saying a lot of the same. So the folks that are immersed in this or see opportunity in this, we had Kathy Wood of ARK Invest saying much of the same, and then the new administration.
Yeah, she says buy Tesla, and then she sells it out from under us.
Regulatory clarity to Bitcoin and the other digital assets, particularly when Gary Gensler steps down. So that helps the group overall, which is what you've been saying too, Bruno. Thank you so much. Bruno Caratori, thank you. Over at Hashtags. Coming up, disruptors. We'll cover Lam Research, the semiconductor stock moving higher. Many of these names in this group are higher. This is all about the sanctions on China's chip industry, but they're not as bad as they seemed originally, and that's helping the group. We'll be right back.
Good 20. Okay, we hit the first support on the pullback. It's not over till the fat woman sings, I'm telling you. If we go below the 63, I'll buy more, but not till then. It'll load up. But I'm just guessing now, hoping, wishing. Well, we're not always 100%. You know that. I did this one wrong. I admit it. I get an F minus. that over there. Yeah. I'm done. I'm going to quit trading. I'm over, guys. This is my last day. Not really. Do.
Names actually is that this is a company, Lam Research, that produces the DRAM chips or equipment for the DRAM chips that are again produced by Micron, which again, if you just track the value chain, are then supplied into the PC market. So Dell denoted that there was really great opportunities, essentially in the artificial
SPY calls I swung are 339 and I sold them at 140.
The pricing power, which is eroding here for the memory chips of PCs, is going down, but that's to be offset by the high bandwidth memory that companies like Lam Research.
I thought we'd go back to the VWAP. There's why I got in that trade.
That for AI server markets, and those are areas which are again growing, but it still doesn't constitute Lam Research's equipment revenue breakdown of the majority. So I think that's again a call from Bernstein that's adjusting to be more conservative, because the PC markets really haven't seen what a lot, including myself, expected to be sort of a cycle refresh of PC demand, and it could be based upon the fact that folks and of course corporations are holding back because they want the AI-based PCs to be embedded going forward, but also maybe there's a little bit of lightness in discretionary spending on computers this holiday season. But nonetheless, the other news is the Biden administration is also looking to sanction some of the high bandwidth memory sales from Micron, for instance, to China, which again would be bad news on a typical day, but not the case for Lam Research. And I think it's also because the company's stock is actually trading at a very low forward multiple at around 16 times next year's earnings, where historically it's around 20 times. So the adjustments in price seem to have actually played out in this name over the past 6 months relative to expectations going forward.
Yeah, I mean, the whole group really impressing Wall Street today now, to your point, explaining why we are seeing the moves that we are seeing. Folks must be happy on this Friday to see this group jumping in that way. So how would you go about an example trade today, George?
Yeah, I mean, if you look at Lam Research, I think there's what I see is stability. And if you look at the price action, especially over the past 6 months, going back to July, even September, as well as earlier this month or midpoint of this month, the $70 area looks like there's an area of strong support. So what I'm going to do is I'm going to go out to January and I'm going to sell the $70 monthly cash secured puts. And coincidentally, that $70 price level corresponds to selling the out of the money $70 puts.
Power hour in 14
now, you
minutes.
want to sell low delta of 30 or lower, so which that implies a probability of success or profit.
Yeah, this thing,
Or
it's very
selling
strong.
weightless, you know, it's more than 2/3 probability. So you could actually sell those $70 puts for $2 a share or $200 a contract. So in essence, all we need to do is have the stock hold the $70 or higher level by expiration in 49 days to achieve max profit in this trade. But if you structure this, just in case the market pulls back and the stock,
Now we are
this stock
5
does
cents
come
and I
in
sold
with
at
the
15.
market altogether, you would be assigned the shares at $70.
So I lost
which again is lower by
$850
about $5 off the current price, but your cost basis is 68. So it's a bullish trade, but it allows time decay and flexibility to have the stock pull back to that $70 level, which it certainly could retest between now and expiration.
Right, understood. I'm looking at all these names now and all these names to watch. I mean, the obvious of NVIDIA and AMAT and KLA, ASML, but also just watching some names like Samsung and Micron, Intel, Taiwan Semi. So a lot of names to watch here on the heels of this report. We'll learn more next week, I'm sure. But this is how we're setting up. Thank you so much, George Sills. Great to see you. Coming up, did you hit the grocery stores? It's our 360 round. We're looking at the grocery stocks. We did have the Thanksgiving holiday. How did people shop? How were they going to shop going forward? They are still facing inflation. We'll be right back.
No, that was a real sell and watch it dip.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey.
New high.
Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Carl's Way is the best way.
At Schwab, how I choose to invest
He's
is
correct.
up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Yeah, no can do.
Where are you going?
Schwab.
Schwab.
I'm gonna go get my coffee and I'll be right back. Wish I'd have jumped in that NVIDIA Friday or yesterday or Wednesday. That's my long favorite.
Welcome back to Trading 360. It's time for our 360 round. We're looking at the stocks related to grocery stores, how people are shopping. Look, Thanksgiving, we did see an average of folks saying that they plan to spend more. We'll get the finals, but that costs were rising 19% year over year. And more than a third said they plan to do this spending, many of which a third was using credit cards, and about 14% already saying they had regretted their decision to do so with a little buyer's remorse.
Uh-huh. I said that.
Consumer practice lead at Carney, and Scott Mushkin, founder, CEO.
What a frickin' day today.
Thank you both for being with us. So, Greg, some of your thoughts. I mean, Walmart, for example, tried to face the problem. Like, they were saying they had a $53 turkey dinner. And if you wanted to get turkey from Walmart, you could get that, and you could get turkey, stuffing, gravy, cranberry.
What are you calling a turkey?
And dessert, Rich is with me, all for a big bargain in this inflationary environment. I hope you had a good one. So what are your thoughts?
Oh, God.
Well, you're starting to see bundles. That's what really the key is in the grocery space now. It's, are you able to put together a market basket that balances your margins between various different products? So that bundling that you saw during Thanksgiving is something that we would expect to see going through the holiday season, particularly as CPG companies and promotional spending starts to increase.
Right, understood. Scott, some of your thoughts. I mean, where do we stand? Because we look at Kroger, Albertsons. I don't know where we finish. I mean, that's still trading. That deal's probably not finalized. Target, Walmart. I mean, Kroger, for example, has lots of buy ratings and outperforms.
You know, I think, I hope you had a nice Thanksgiving, Nicole. So, I think the issue is that there's definitely bundling going on. But if you look at a pricing survey that we just ran up in Massachusetts, I mean, prices continue to be up a lot. To kind of give you an example of that, if you wanted to bake a chocolate cake with vanilla icing, a Betty Crocker cake, it was going to cost you 53% more than it did 3 years ago. Now, some of that's eggs, because egg pricing's up quite a bit because of avian flu. But there's definitely bundles going on. Walmart's promoted it, Aldi's promoted it. But if you look at the basic cost of grocery, it's up quite a bit. It's being led by the packaged food companies. And taking a look at those commodities, which we did, it's hard to justify how much they've raised prices, in our opinion. So you may see some more pushback, not just from the consumers, but from the likes of Kroger, Walmart, promoting their private label, because it does look they've taken some liberties, the packaged food companies.
So how do we expect people, I mean, as far as foot traffic and all of these names, will they all survive? Greg, some of your thoughts on the big picture. Should they all do well over the holidays and in the new year despite the inflationary environment? And also, could the tariffs then cause more inflation for shoppers in the grocery store? Greg?
There's going to be a couple of different elements. From the grocery perspective, everyone's trying to get out of the middle. They need to either be low price discounters or high service, high assortment retailers. And you really don't want to be stuck in the middle. Those that are in the middle are going to start to face a lot of margin pressure. And as we start going into a new administration, find themselves under the spotlight for potential acquisitions.
Yeah. Scott, what do you think are the winners? If you named the names, which ones, investors want to know, shoppers want to know, leaders in grocery?
Yeah, I mean, the leader in grocery is Walmart. They're taking a lot of share. We haven't talked about Amazon, and Amazon doesn't really have a fresh offering per se, but they're taking enormous amounts of share, especially in categories like health and beauty care and pet. Amazon's also being incredibly aggressive on pricing. And so I think those are definite winners. I mean, if you're broadening out outside of grocery, obviously we had Target report, tough, kind of a tough quarter, tough outlook. So you're really seeing these, they call them like the three behemoths, and it's Walmart, Amazon, and Costco, just taking an enormous amount of share, taking a lot of the oxygen out of the room. And part of that is actually related to the consumer still has a preference to spend incremental money on services. And so what you're seeing in the goods market right now is that they're fighting over a market for retailers that isn't growing all that fast, if at all.
Yeah, and Greg, final thought. I mean, people want, as you said, they're looking for something unique or some sort of clear definition from each retailer or seller, whether it's the grocery store or Amazon or Instacart or Fresh Direct or whatever, however you get your apples on the table. Greg, final thought about some of these players. Maybe you could name some names and something that has been very distinct to you.
Well, the key is that you
unbelievable on them calls.
Spend. You need retailers to continue to be
for
retailers.
the SPY 366
smart
now.
Merchandising, smart product selection.
I'm so
If you wanted
stupid.
to see something exciting, the Target Taylor
They had a
Swift
high of what?
collaboration. That's an example of something that is trying to drive traffic. It's
388.
grocery, but it does start to
Golly.
bring people into the sector. So you're going to see more of those unique promotional.
I had 10 of these
efforts to try
calls
to get the
that I
consumer
swung
preference swayed in the direction of the retailer of
for
choice.
$1 that I got in Wednesday. See how this is freaking out? That platform. They're now at 377. So I got out at 140 and they're at 373. And then I didn't even have anything to drink yesterday. Now I wish I did. I had some sweet potato wine I could have drunk. I didn't take a glass. Tesla bounced off that 200 I called. Okay. Now that I got an F minus, I've had 2 F minuses in 2 weeks. Magnificent. Well, and we'll make it back up. I promise you. Yeah, I want to talk about that. You've all been witnesses many times when I have a bad trade. And then I come back the next day and boom! So it really doesn't, I mean, it's hard, it's pressure on my skin, but I'm just telling you how it works out. I'm gonna go buy printer ink when I get out of here. supposed to be a picture of Zuck looking into the plane with Trump and Elon, and when they're having that Big Mac meal. I'm trying to find that picture. Zuck, I got to thinking about this morning. Zuck's he's rich. He got a lot of money, and he's really got into Trump, basically because he's in UFC now and messing with them guys, and you know how they're doing him. Probably laughing at him until he finally convinced that everybody loves Trump. And then he's thinking about Elon and the new things that are coming up that could change our country to the good. They're visionaries, and we've not had visionaries in this for the last. Trump was the last one we've had 4 years ago. 4 years ago. Then we've had depression and how much America sucks under the other politicians. So I think Zuckerberg knows the difference between someone suggesting or trying to give him ideas instead of someone that's going to put you in jail if you don't censor people on Facebook. You have alternatives. It's either you do it our way or we find the shit out of you. And I think Zuckerberg's smart enough to figure that out. That he's got somebody that wants to work with him and help him spend that money. And he wants to be in that plane eating Big Macs with Elon and Trump and his family. So I think, man, and he likes the fact that he doesn't like the fact that Trump got shot, but he likes the fact that he said fight, fight, fight. Because Zuck knows what it's like to be under pressure from the government, and Trump's wanting to fight against that deposition there. And I think it's just a lot of people don't see that, but I do. I vision that he's looking inside that plane, wishing he was in there sitting with them guys planning this stuff out. I don't know if that makes sense to you all, but wouldn't you rather have someone being polite and working with you and or suggesting things and giving you ideas than someone that's telling you, hey, if you don't do it my way, it's the highway. We're going to force you to do it if you like it or not. So I'm going to do a video on that tonight, if I can just kind of word it out right and be halfway logical. I always liked Zuck anyway, but he don't get on Facebook and does crap like Elon does, but it's interesting to listen to his father. So in the bureaucrat room, I put that video. It's a good watch. Profit taking has started. No, better not. It's still at 5 cents. These things are depreciated. They ain't going to be worth a crap. I'm out anyway. I feel like a fool today. I'm thinking about starting a political YouTube channel. I think I'd make more money that way. I mean, if I wanted to monetize. Making fun of liberals. I've got a Head and Shoulders on MU. Because I used to be one. I could define everything, how they think. RDDT is one that I really regret not jumping in on that one. And I didn't think it would do that. Was it RDDT? Reddit. It's almost shortable. $47.50 all the way up to one. That's a 300% increase. I mean, that's a nice run. That's a huge run. I didn't think it would do it. It's a meme stock. Or at least I categorized it as a meme. You're done? Yep. RFK's a John F. New highs on the SPY and the SPX. It is now 50 minutes left in the day. When I get out of here, I'm going to go buy me some ink and I'm going to do a bunch of videos today. There I go. I'm not going to buy much Christmas stuff this year. Might get me another watch. I'm into watches now. It was tennis shoes, now I'm watches. I got 4 watches here in the last month. Well, okay. YouTubers, Tesla big bounce off the 200, yippers. No, I can't go anywhere. I was just joking. I just had a bad day today. Actually, with $400 win and an $800 loss, $850. I'm only down $450 for the day. Just stupid. Dum 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 dum. There's a head and shoulders. Inverse and a 1, 2, 3.
Almost the end of the year, Alex, and like I said, the great thing about the
so high, you can't get over. So wide, you can't get around. So low, you can't get on it. You must come in back. Rolling is high, so high, you can't get over. It's wide, so wide, you can't get around. I know it's so low, you can't get under.
high. Can't get enough so high. Can't get enough so high. You're in serious trouble, Diddy. You're in real bad trouble, Mr. Diddy. Doo-doo. SMCI pullback 7%. Now I heard Intel might have a takeover. And if Elon buys MSNCB or whatever that's called, I think that'll be the precursor that we might get back some serious news.
Technical insights on.
I was just kind of excited to see what's going to happen in the next 2 years. What did I do wrong today, Jim? What did I do wrong? I mean, that's a good looking chart. How that came back and touched the old resistance. That's probably where I should have sold it. I know I was about even right here. That'd probably been the best spot to get out right there at 90 cents. Da 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 da. New high.
E-commerce retail footprint, getting into like lower priced apparel.
We're
now,
pumping
and
Amazon
they're
into
starting
Christmas.
to do, healthcare products they're starting to deliver. But Amazon just keeps getting more important. And now Prime Video, Alex, live sports is the next catalyst. It's the next mountain for streamers. And Prime Video is already doing it. And it's only going to pick up more. It's starting with the NFL, and they're doing.
I'm not done.
Good at it, actually. They've really put the money into it.
I'm cooked.
But in terms of Christmas shopping, a lot of look at yesterday's Macy's parade, and the weather was horrible.
Yes, it was.
That probably.
I heard they had some protesters too.
If the weather stays poor on the East Coast, that may take people out of brick and mortar and put them into e-commerce, and Amazon will win that. And as more and more adaption comes, Alex, Amazon just gets more and more popular, and then they work on the expense side, and the profits get bigger, Alex.
I was thinking about this too, where, we put all this weight into like these big days, the Black Friday, Amazon Prime Day, Cyber Monday. But the reality is they become almost like event time frames, where it's like the deals start a couple days earlier because it gives you an advantage. So then everybody else starts them a couple days earlier too. The doorbusters were giving them a lot of bad PR when people were getting hurt running down the doors at midnight. So while it was the Wild Wild West 10, 15 years ago, and it was kind of funny to hear and read about, those days aren't the same anymore. And it seems now consumers have a preference for a lot of things just to buy them online. And, when these deals come around, maybe you're not getting necessarily gifts and things, but maybe you're just getting, basic things you need for around the house because everything's sold, at off price on Amazon during this time frame. So I have to imagine that if the consumer is still spending, they're still spending at Amazon.
Yeah, I think the new Christmas shopping, remember, it used to be the people bursting in the door. That was the viral moment. Then it was the fights that were the viral moment. Now the viral moments have evolved into maybe you're sitting at your computer on the websites and you're on social media, Instagram or Facebook, and the ads that you get there for shopping. I'd love to see data on the percentage of Christmas shopping switching to online from big box retailers. Big box retailers are still there. Some people still like that experience, but boy, Alex, I'm not a young shopper, but I've never done more Christmas shopping online and over video and through websites. So that part of Christmas shopping just keeps getting bigger and bigger and bigger. Alex,
he's correct.
Don't know if it'll ever go back.
Hey, and context and numbers that we actually have from yesterday, so not even today, just Thanksgiving Day, according to Adobe, U.S. consumers spent a record $6.1 billion yesterday online. That's an 8.8% increase year over year. So one of my things has been, hey, yeah, we might see growth in some of these numbers, but I had seen figures for the whole season of like 2-3%. You could argue, well, some of that's just more expensive goods. But 8.8% on Thanksgiving online sales, that's not just because things are more expensive. That means more people logged on and bought things yesterday than they did last year. So I think that's interesting. I think it puts some context and numbers to exactly what you're saying, which is, hey, maybe we're not outside the door 5 hours before midnight waiting for these deals the same way that we might have been 15 years ago. Maybe we just log in online at our own leisure, and if there's something we're interested in buying, we buy it, and then Amazon somehow gets it to us 3 or 4 hours later, depending on where you live. But Kev, talk to me about an example trade, one of the most liquid stocks that there is, tons of strike selection, tons of options expirations available, and a stock that's been pretty volatile over the last few weeks.
Yeah, Amazon, you mentioned it to start the show. The Dow or the S&P is driving to new all-time highs, but Amazon's not at a new all-time high. It sold up from $215 down to about $195. Now it's starting to recover with the rest of the market, but this is a stock that has still a ways to go before it hits all-time highs, and you can mention that, with the earnings that came out, there was a big beat, net sales up 11%. Beat on earnings per share, that with trends, the long-term trends going towards them, that this is a stock built for the future of the market. So what I looked at here, Alex, is something that we do a lot of. It's kind of our go-to long delta strategy now, and that is the call diagonal. I went out to December 27th, so basically a month from now is where we went out to, Alex, 28 days. And I bought the 205 call and sold next week's 210 call. Now, the market's rallying. Amazon's almost $207, so that move of $6 might take you to a strike a little higher. You might want to extend this. I put this in earlier in the day. The stock is higher than where we put this in. So I did the 205, 210, but you might want to extend that short option a little higher. I put it in about 490 is where I have the debit. It's up to 525 already. So it's already rallied 35 cents from where we started looking at these trades an hour and a half or so. So the call diagonal gives you a pretty nice delta here, and it's in the mid 30s. And this is, like I said, you're looking for a move between 205 and 210. you may want to extend that short strike price a little higher than 210 because the expected move for next week, Alex, about $6.50.
Yeah, so the debit spends the risk. So just using what you had earlier, we know that the prices move. So just understand that if you did the exact same example trade in real time, the risk would change with that debit changing. Markets are dynamic. But if it was a $490 debit, you got $490 in risk. You can see that risk profile. Clearly a bullish leaning strategy as it does better as the stock goes higher. But Kev, you kind of answered the question that I had, but I think it's
Electric
worth,
bike.
Kind of, talking about a little bit more. You talked about how the market movement might influence strike selection, how you might change that strategy now in real time. My question was going to be, is it one of these strikes that gets adjusted in your mind? Is it both? Or is it a situation where you're comfortable with the more debit? And I think that's those are your three choices. Or I guess just not doing the trade altogether and saying you missed it. But it sounds like your initial thought was, maybe you move that short strike to 215, leave the other at 205. But there's, of course, pros and cons to all of those decisions.
Sure. Now, the stock has rallied $1.50 as we start the day. Now it's trading over $207. The trade-off, and there is some, Alex, right now we have the 205, 210. That's only $5 wide and only $3 higher than we're trading right now. Now, if you were to roll that to the 210 on the long side, right, you'd probably save $4.75, more than $2 on the longs. But your delta would be less. And, the delta on the 205 is about 60. You'd be rolling down to about a 46. I think you want a little more bite with that on the long side. Now, the short side, if we're going over that one, let's say next week you move that from the 210 to the 212.5. Now, the 212.5 is pretty close to the expected move. That's still trading about $1.18, $1.20. So that one is the better candidate, I feel, to be if you're going to move a strike. I think if you rolled from 205 to 210, the longer dated option doesn't have those 7.5 strikes. That would be lowering that delta too much. I think if you figure out that the 212.5 is, trading about $1.18, $1.20, that's maybe where you make the adjustment watching this spread over time. So remember, the trade-off is you're going to pay a little more. The 210 is almost $2, and the 212 is about $1.15 or so. So you're going to pay a little more on the debit, but it's going to make the peak of that diagonal a little further out, Alex.
And see, that's the beauty too. As we get shorter dated at Amazon, they add those more strikes too. With next week having those $2.50 wide strikes. Of course, December 27th doesn't have those yet. I would assume at some point they'll get them added, but just not yet. So a little bit less optionality in those long options where you can do that 212.5, just adjusting a little bit on that short
60-35 put.
Give yourself a little bit wider
if it doesn't hold this here moving average.
Okay, we're gonna take a short break though.
At 115.
Bullish strategy, risk defined, looking for an up move perhaps in Amazon if you're looking at that example trade. But coming up next, we're going to have our cash tags conversation. The team from Likefolio.
Okay, I'm watching.
For some consumer
I'm going to see if it doesn't hold this 63.
Retailers at large here, but specifically we're going to be looking at Walmart as well for example trade purposes. One of the big winners that's consistently come up throughout retail discussions. So stick around and we'll be right back.
SPX put.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Welcome back. Time for Cash Tags. We're going to look at retail trends here on this Black Friday. And joining us from likefolio.com is Megan Brantley, the VP of Research at likefolio.com. Megan, it seems that it's been like death, taxes, and like retail trends and sentiment favoring Amazon and Walmart. So I'm just going to guess
Walmart.
Your data is going to say something similar, but why don't you walk us through what you guys are following?
Yeah, so whenever we look at especially how all these retailers are faring in this critical season for these names, we see a clear line in the sand. I think that at large, a lot of this we're looking at e-commerce data, and we see a shift in a lot of consumers who are selective about where they're shopping and what they're buying, and they're looking online to do their research, and this is really benefiting names like Amazon and names like Walmart. And so you can see this on a chart. We have really significant year-over-year growth in activity for Amazon, which could be probably one of the biggest plays heading into this holiday season on our end, because the stock just hasn't gained as much traction as, say, a name like a Walmart that has been really successful over the last year in gaining these higher earning consumers and retaining them and shifting them outside of areas from just going online and Walmart to shop for groceries to now they're buying apparel, they're buying electronics, they're shopping for other things. And so I think that that's one thing that Walmart has done a really, really good job of, is not only attracting those shoppers, but keeping them and allowing them to find value. Whenever we look at the other names on this list, when you look at a Target, this is one that struggled. Last quarter it struggled. We do see some signs of traction whenever we look at its app data specifically and its Target Circle membership. So I think that there are still signs of life for this retailer. But whenever we look at our data, you see Walmart and Amazon just outperforming, and a lot of that is because of how easy these retailers have made it to log on, get on the app, look through a ton of inventory, and have something shipped to you really, really quickly.
Megan, we just went through an incredible earnings a week or so where Walmart came out with earnings with a big beat, talking about non-grocery spending, discretionary spending doing extremely well. We connected the dots to think maybe Target would do the same. They came in with the opposite, weak discretionary. What does your data show about Walmart competing with Amazon, Target competing with Walmart and Amazon, and how that's playing out? I mean, and you throw Costco in the mix there, and though I don't think I want Walmart wrapping paper on my Christmas present from my children, the overall look
now
of Walmart has changed as a retailer over the last several years.
Jimmy's going to take
compete with
chance.
anybody and everybody. Megan?
I'm going to change it to
I
40.
think that one of the best things that ever happened to Walmart was when it no longer required consumers to actually enter its stores.
130.
I think that this really changed the entire perception of the brand for a lot of consumers. And now you have consumers who are looking online and they're finding things that not only are a lower price point, but maybe have a bit of a higher quality level than they were previously expecting from Walmart. And so Walmart has seemed to do a really good job of
Okay, I'm taking a
leveraging
chance.
understanding what products its consumers want. And
If we
what
get
they're
stopped
willing
out,
to
Ryan,
pay.
gonna hold
And I
on to
think
this
that
baby.
That's where Target has kind of missed the boat, and this is a flop. You know, this is a big switch from what we would have been talking about just a couple
Give
of
me,
years ago.
give me,
where
give me
now
50
it
cents.
seems like Target has lost that value proposition with a lot of consumers, and it's trying to earn its way back. And we see signs that it is starting to earn its way back, but I think maybe last quarter was a bit too early to see kind of the benefits
25.
of some of the changes.
We could go
internally that
higher
Target is
still,
making.
too.
And obviously, it still has some room for improvement, but Walmart clearly is outperforming.
Let's
and
go to
giving
Walmart,
consumers the
fill up our
value
shopping
that they're
carts.
looking for, and doing a
Pinball,
really good
bird
job of
seeds, all
retaining
things you
those-
need.
those
Let's go to
one-owner consumers
Walmart
that maybe
now.
came over during COVID because Walmart had really affordable groceries, and now they're realizing, wait a minute, I can buy other things from this
Whoop,
retailer.
wrong one.
So I think that, you know, our data
How'd that
clearly
get on
shows
there?
Walmart's doing a good job, but we see Amazon doing extremely well also, and a lot of other tailwinds within Amazon that's helping to propel it that perhaps Walmart doesn't have to.
So, Megan, I think the point resonates really strong with me too, how you kind of started this discussion, which is companies like Walmart and Amazon, you log on to and you can find things.
Go to Walmart,
You don't need to know what
fill
you
up
want
shopping
already
cart.
because they sell essentially everything. So to me, then it makes a lot of sense too in the backdrop that I think is basically consensus at this point, which is that consumers are a little more value in budget conscious. They're going to favor those efficient e-commerce players that can do that. Walmart and Amazon fit that bill. So as we look kind of deeper, second, third level, and we start thinking, you know, what kind of companies could outperform
Magnificent.
this holiday season?
I'm changing that
is it
grade
going to have to be companies
to
that
a
have like
regular
one
C
trend product?
for the day.
Because unless you're an Amazon or Walmart that sells everything and people are just going there to look for things,
We're at 140.
don't you have to then kind of think that you
Drop.
want it to then go to the website? Like I said, it seems like right now, I guess what I'm trying to say is there clear winners that you guys see in some of these smaller, maybe more direct-to-consumer brands?
155.
That are hiding, kind of in the I guess in the grass.
160.
Underappreciated. Yeah, I think that that's a really smart way to
Drop.
approach things. And I actually did look around for some outliers that we're looking at of overperformers. And we're seeing that consumers are really selective. They want something of high quality. And so these exclusive brands are performing really well. We see a lot of traction whenever you look at OnCloud. That is a name that those e-commerce numbers look really strong right now. Lululemon looks surprisingly strong. We have e-commerce
Lululemon.
by
There's 150. I can get out right now, but I want it to drop. Lululemon looks good now. That's another Christmas special. God, at SPY. I'm so stupid about that. I'm so dead. Oh no. 125. What time is it? We're at 11:40. I better get out of this trade. There's 150 right there. If I can just 25 more cents. Oh, there we go. Okay. 175. 185. I'm getting out. 180. There you go, buddy. I made it. I made it back. That's bullshit. Watch it go. What? I sold it. Oh. Whew. I'm the happiest guy in the world. I made back plus. I'm in the green. A minus? Give me a grade. Give me an average grade. I want to see. That just tells you. C plus is good. Very good. I'll take that. I think I'm, what do you call it? Vindicated. YouTube, I want to give me a grade. Tesla, I need a grade. Another thing that I found out about Elon through his dad, which I already kind of knew, but it just kind of sealed the deal, is that Biden neglected Elon on the EV car thingamajigger and brought all the other car companies in but Elon. And they're giving money to like General Motors that made like 25 electric cars, to where Elon had made 1 million cars. So he kind of didn't like that. And I think that's what got him all riled up, Elon. He didn't quite understand why, and that would just kind of tells you that Biden's not that bright. If he'd took Elon under his wings, and Elon was giving these guys patents, free patents and everything to start this, he was helping them out, trying to push them along. And then he just said, screw it. But if I think if Biden would have took him under his wings, just like things could have probably been better for Biden. S&P leaders today, LVS is on there, Las Vegas Sands. LVS, that was the first option I ever traded. And everybody, it was a bad deal at that time. But I won. And let's see, I was around $45. It's still around there. Right. Today's losers. GME is down $1.90. Heard the movies are making some good money. I'm going to set an alert right off its 28. Tiny bubble and wine make me happy, make me feel fine. Tiny bubble make me warm all over. Feeling I'm gonna love you till the end of time. That's $1 to $1.35. I'm out again. I mostly hear the toast for me and me. Tiny bubble. Another 300. Make me happy. Make me fine. Tiny bubble. Make me warm all over. Feeling that I'm gonna love you till the end of time. To the 63, then we'll draw. Yelly-knocky, make-me cold, tiny bubble, make me warm all over. Feeling I'm gonna love you till the end of time. Feeling I'm gonna love you till love you the end of time. Bingo. That's another 300. Inverse Head and Shoulders. Hike. Oh man, there's another good opportunity right there. Oh gosh. 85 cents to 125. I almost did it too. There's 85 again. What time is it? Nope. No, it's 8 more minutes. There's a 20 center right there. I could have got it, I think, maybe, if it'll let me out. I would definitely got it. 85 to 125, 135, yeah, I'd have got that easily. I'm just going to start, I don't know. I'm not going to complain. I just don't like get stuck and have people lose money and then freak out and not want to trade. There it is too, damn it. Right there at 63. That'd have been a good trade. 85 to 135. No, it isn't. What in the heck is that up there for? 145. Ooh. 155. That's $700 right there. Okay, I've got a game plan. I wanted it to pull back, but it just didn't want to do it until the end of the day. But there's 85 to 150. As you watch me, I'm teaching myself. I'm gonna never stop learning. And I hit that damn 63 right there. Oh, man. Ugh. Did you see that, YouTube? UAVS drones are hot right now. Gosh, you're right. UAVS. I'm going to put that one on my watch list. What was that called again? UAVS. That has been on fire quite a bit. 370? No shit. God. Ugh. God. Oh, $2,000. Unbelievable. 370. Unbelievable. 85 cents to 370. That's $3,000. Yeah, what's going on, baby? Did you just see me lose $3,000, man? I had left it on the table, mama. You spam callers. Jesus. This has been a very emotional day for me. I want to quit. Encourage me not to quit, Magnificent. Butter me up. You gonna give me an A+? Don't quit, Jimmy. Can you believe this? I left $5,500 on the table today. I gotta learn how to stay in these trades. I'll give you an A+ too. I can't tell you how much money I've left on the table. A lot more than I've lost. 5,000, 20,000 fold. I just got to learn how to stay in them. I mean, I tried it today and it didn't work. I lost $780, $800. I tried it today and it didn't work. And then I get a little nervous. They're at 440, 460. Give me a break. 85 cents at 480. That's $4,000. That's a $7,000 a day. 65 that I left on the table. Out, I made 115 out at 180, back in at $1, out at 130, and it's at 460 at the 200 SMA. My signature trade, a 123 drop. God, did you see that, Randy? Ding, ding, ding. That sucks. I'm so used to them parabolic runs when they break out like that to go ahead and buy the put. It almost 95% of the time works out, and it worked out again. But not my initial trade, but still yet. It probably did. I mean, what? I had to 6,000? No, it didn't do shit. You have to get closer to the money. So I think my big mistake was not selling it even and moving it down closer to the money, because by that time I was already 6 notches out of the money. And it's hard to recover a put from that much of a distance in the money. I got to go out and get some ink. I really don't want to go out there and deal with the traffic. Okay. Well, I hope everybody had a good time at Thanksgiving. My family's kind of divided, so I had to go here and there. I'm going to sit back and watch videos and do a couple videos this weekend, and please watch them, subscribe, and ring that bell. I didn't get off to a good start today, but I sure finished up nice. It could have been a real good day today. If I'd have held the SPY swings, they were up big, and I got out because, you know, it was the same day, and I don't like playing same day expiration. And then getting stuck in that SPX and then trading at the end of the day, man, that would have been a trip. I could have had if I'd bought 20 of them at 85 cents. I was getting ready to buy that last dip, but I didn't do it, so on me. I'll catch y'all later, and I really appreciate y'all. They closed at 750. Golly. Oh, Randy. You know what that does to my ego? Okay. I know it. I feel a little spaced out. So I'm going to watch a couple videos, and I thought I probably need to eat a burrito. Good job, Rob. Let me see, I'm going to play a song here until the end. Something that really catches me right now. I got one.
to you.
You say you were wrong to ever leave me alone, and now you're sorry, you're lonesome and scared, and you say you'd be happy if you could just come back home. Well, here's a quarter, call someone who cares. Call someone who listens and might give a damn. Maybe one of your sordid affairs. Don't you come around here handing me none of your life. Here's a quarter, call someone who cares.
We had would never turn back.
So you're leaving, caught
Me unaware.
But the fact is you're wrong, girl, that
Can't be undone. Quarter, someone cares. Oh, listen, might give a damn. Sordid affair. None of your mind. Quarter, someone who cares. Someone who cares. Old Country Jim. Used to be able to whip them out when I was younger. I could have been a country star, I don't know. But I didn't do it. You never know until you get out there and give it a fight. But I got tired of staying up all night. So I found a woman and I went home. And she kind of dragged me along. She took all my money and she took all my fame. And then I lied down there in the ditch in the hall of shame. Y'all have a great day.